catering to the leisure segment as well as the large format MICE segment. And it's a beachfront resort with over 200 keys. Another hotel which we have signed with Hyatt is Hyatt House Devanahalli, which is a long format stay hotel. So these two hotels we have just signed with Hyatt, and in addition to this, we have a strong pipeline across segments and with other operating partners as well.
Manoj, the belief usually is that the hotel sector has been cyclical, and therefore it runs a 6-year cycle and then comes off, or a 5-year cycle may come off a little bit. We are technically in the 5th year of this cycle that could have started from 2021, if you will. Is the view this time different with the kind of aggressive plans that you are citing and some of your peers are citing as well?
See, historically, you're right. Hospitality used to be a cyclical industry, and the cycle used to last between 6 to 8 years. But post-COVID, we have seen a fundamental and structural change in the Indian hospitality sector. Now, with the GDP, the way it is growing and the way it is expected to grow, and the Indian economy, the way it is moving, and if you look at the room supply, the branded inventory available in India, and the declared or the planned room supply that is coming over the next 6 years, India still remains a very low penetrated branded hotel inventory market if you compare to other large economies or growing economies. So I don't think that this time the cycle is as it used to be a 5 to 6 year cycle, but it's a long-term play in the hospitality industry that we are seeing. The demand is it's outstripping the supply that is announced and that is coming up, and we are seeing a strong growth over the coming 5 to 10 years at least.
Q3 performance, for example, Manoj, I mean, it was about a 14% YOY growth. The 9-month income is up about 19%. Good, not necessarily blockbuster growth. So is that an aberration, or is that the kind of growth that you want to pursue and foresee for, let's say, FY27 as well?
See, we have continuously delivering, high double-digit growth over the last 2 to 3 years. And as I said, the demand outlook, barring a few hiccups, in the last 2-3 months because of the whole geopolitical tension and all, but the overall stabilized demand outlook remains strong, and we expect to continue to deliver our high double-digit growth scenario over the next couple of years as well.
Mr. Agarwal, what are your revenue guidelines after all of these tie-ups? Do you see revenue bumping up significantly?
See, as I said, we have a strong pipeline of hotels that we are doing. We are going from 1,600 keys that we currently operating to 3,300 plus keys over the next 4 to 5 years when these hotels start getting into operations. And of course, that will add considerably to our revenue and our overall portfolio performance as and when these hotels start coming into operations. But immediate result forecast I cannot share with you, because right now we are in a silent period. And we are
just trying to understand the timeline to go from 1,800 to 3,300 keys.
It's over next 5 years. By 2030, we will be doubling our portfolio.
Okay.
Yes.
Okay. Thank you so much, Mr. Agarwal, for speaking with us today. He's the COO of Brigade Hotel Ventures. But moving on to speak about Hindustan Copper, their Vision 2030 is a Capex heavy reset. Over 7,000 crores lined up through FY30 with ore capacity targeted to jump and profits projected to scale. Before we speak to the management, Varsha joins in with more details.
Well, thank you so much for that. Key takeaways from their annual plan meet was, one is aggressive capacity expansion that the company is doing, and they're also diversifying into high growth areas and strong a strong PAT growth is expected, and digital and governance transformation is underway. Talking about the Capex plan, total Capex plan is around 7,188 crore, and heavy investment phase is expected ahead. Onto the production expansion, ore production is expected to expand from 4.21 MTPA to 12 MTPA, and milling capacity is also expected to scale around 4x. Talking about profit and dividend outlook, profit growth is expected to rise from 589 crore in FY26 to 1,568 crore by FY30, and dividend is expected at 470 crore in FY30. Then strong earning visibility is expected to scale up. Talking about lastly the diversification strategy, they are entering into critical minerals and renewable energy. So overall, the diversification strategy and the heavy Capex and earnings growth is what will lead the next expansion when it comes to Hindustan Copper.
Thank you for that, Varsha. In fact, Sanjeev Kumar Singh, the CMD of Hindustan Copper, with us this morning. Mr. Singh, thank you for your time to us here at NDTV Profit. We want to know about your vision 2030, but if you can just begin by getting a sense from you on the impact you're seeing of the geopolitical disruptions for your business specifically. Has there been an addition to freight rates which has hurt? What has been the impact for you?
Thank you, ma'am, and very good morning to all the viewers. Definitely this war, Middle East Asia war, has impacted us. Our explosive costs have gone up substantially. So that is one of the aspects with which we are taking up the challenges. And as far as the production and other aspects of the mining is concerned, it is in line.
Extent of costs that have gone up, and are you able to pass these on at all?
No, ma'am. These costs have been absorbed by mine operators, basically. This is inbuilt in such a way that they have to absorb it. And presently, it is only the explosive part which has gone up by 25%.
Sir, I want to talk about the expansion that is planned and the roadmap heading towards the target that you've laid out over the course of the coming years. Can you take us through that, and specifically in this financial year, what is the kind of execution that you expect? What is the amount that you will spend, and how will you fund it?
This year, that is 26-27, you must have seen in my annual plan meet, which was held on 17th and 18th. We have targeted a Capex of about 450 crores. And as far as funding is concerned, we'll be funding it with our internal accruals itself. But the next year, that is 27-28, since the Capex will be most probably 3 times of this amount, we may have a mix of internal accruals and debt.
Okay. And so you will only have to raise in FY28, right?
Yeah, not before that. And that picture will be more clear in the start of the 27-28, because by that time, most of our machineries and supplies, they will be starting arriving at my mining sites.
Sir, the tendency of several managements, I wonder if it's the case with you, is to under-promise and over-deliver. So I wonder if that is the case for both your volume and price assumptions for this financial year.
These prices are external factors. You know very well, dollar and LME is not in our hand. And as a planner, basically we plan it, we envisage in the coming years, we have to be on a lower side. See, you can't be optimistic as far as planning is concerned.
But having said that, I take that point, sir. But on the volume front, at least you can make a projection. So pricing, I can understand that you're being conservative and why you are. But on the volume side?
Volume is okay. I think since in these 2 years, 26, 27, 27, 28, most of the Capex will be in place. So the results will start coming after that only. You must have seen there is a spike between 28, 29 and 29, 30. By that time, our shafts is Malanjkhand, which is the biggest mine, will be completed. So there is a spike. So the build-up of the production is in a gradual manner. That's why it's not on the lower side. It's a gradual build-up. In mining, you cannot have a high build-up. Build-up or ramp-up, which we call in a normal sense, is slowly, unless until the mine infrastructure is ready for the production. And once it is ready, there is a spike in production.
Sanjeev ji, good morning. Neeraj Shah here. I have 2 follow-up questions on the very same thing, sir.
Yeah.
Do you, by virtue of your answer, I'm guessing that the capacity expansion and the volume targets, therefore, that you've laid out are well thought of and conservative, keeping in mind execution delays as well. Would it be safe to assume that this is the bare minimum or the exact capacity numbers that you will reach at the targeted FY30 date?
Hey, number one, I'd like to clarify there should not be any delay. Tenders have been awarded by 31st March. Number one, now execution is in our hand. There is no issue of land or anything. So things, and we have in past also, we have seen that we have done the executions in time. So as far as delays, I don't think there should be any delay unless until the war or something external factor comes into picture. The second aspect is the ramp up, which I just mentioned, in a mining unit, any mining unit, whether it's a copper or any mining unit, it is in a gradual manner. Once the mine infrastructure is ready, then you start the producing the ore, and then there is a spike which you can see in the last 2 years. In the 5 years which we have projected, you just see our last 2 years. It is giving more amount of production of ore and also MIC both.
Okay. Sanjeev, the second question is, again, something that you mentioned, pricing. Yes, granted it is not in your hands, but I would love to know the average pricing assumption that you've taken for the numbers that you've given, particularly in the PAT side, right? You're citing it moving from 589 crores to 1568 crores. What is the copper price assumption there? And yes, you have to be conservative, but you have a strong thought, I'm sure, on what copper prices could do as well over a period of time. Are you being overly conservative here? What is the price, and are you being conservative here?
Not overly conservative. See, we have seen our averages last few years of pricing, and we have taken the range as between $9,000 to $10,000. And one thing I like to mention here, again, that it is, we are focusing on our operational efficiencies. We are not going with the LME or a rupee dollar, because I told you, there are external factors which are not in my hand. You just see my results, 9-month results, and which the results will come. We have maintained our operational efficiencies, and that is our focus. It's the focus of Hindustan Copper.
No, Mr. Singh, I agree completely, and which is admirable, and we'll talk about that. But I'm just saying, you've taken an average price. Did I hear you say 10,000 versus the current pricing, which is what, at least 30% higher, right?
Yeah. And you very well know why it is higher, because of the supply demand. I had answered your question in the last interview. So that may ease off also. And that should ease off also. Don't you expect to ease off?
We certainly hope.
All of us hope that is the case.
Only Mr. Trump knows, I think. no one else can answer that question.
We have to, as a miner, see, I'm a miner. I have to remain optimistic on this issue.
100%. What is the funding plan for the Capex that you have outlined, Mr. Singh? Will there be a requirement for fundraise? How are you looking at it? Is it all internal accruals?
Definitely. See, 26, 27 by internal accruals. We are pretty sure about our capital. 27, 28, it will be a mix of that's internal accrual as well as debt. And we have already taken approvals from the board with respect to bonds also. So funding is already tied up.
What is the plan as far as rare earths are concerned? Is that something that you're looking at significantly? Anything that you can share with us? It's also strategically important from a national perspective right now.
Yes, from the national perspective, I'm saying, see, we are trying. We still not have any success till now. We are put our tailings in Rajasthan mines. That the K3 mines has a huge tailings of about 70 million tons, and there is a little presence of rare earth. But the thing is that we already have the reports from IBM. We have got the tests done by MECL, and I mentioned that we have drilled the tailings in Rajasthan mine. We are the first company to drill the tailings. It's very difficult because it's a loose area. And then we tested those tailings, and we have found the presence of rare earth. But the thing is that rare earth are two types, high rare earth and low rare earth. And the thing is that the processing part. So we have invited an expression of interest. We are still in a very initial stages. We have discussions with 1 or 2 Australian companies. But then things are moving, but still no idea about the processing part. We only know that in my tailings, there is a presence of rare earth. So we're trying to extract it.
Sir, just to very quick answer. Once you find it, do you have the ability to process it?
That's what I said. That's what we have invited in the tender in UI. We are trying to do it on a revenue sharing basis.
Okay.
We have invited the companies, put up the plant here, do the lab scale, pilot scale, and then move ahead. And then we'll share the revenue. So we are not going to put any capex into it.
Absolutely, sir. Absolute pleasure as always speaking to you. And thank you so much for taking the time. Wish you all the best.
Thank you. We need it.
All right. Well, let's head across straight now to the conversation with HCL Tech, because ultimately this is the biggest decline on the Nifty 50 right now for good reason, because it's missed on several fronts. What is the management saying about the path ahead? Find out on this conversation.
My first question to you, of course, the guidance that you have now given is a wide range, 1 to 4%. Can you give us a sense on what are the variables as well as the factors which will either tick up the growth at 4% or will come down to 1%?
Yeah. Good morning. Yes, our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're in a 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue. And we have two client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's right. And when we talk about the discretionary spend, Mr. Vijay Kumar, how is that really picture developing? What are the factors which are really impacting, and the global turmoil and uncertainty that we are really seeing on the economic front as well? How much of that is impacting the discretionary demand for your space?
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that the environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that has been caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And the last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27. So I think what we are very confident and very optimistic is our ability to really grow the new services. There are 6 or 7 new areas that we are growing, and that is going to help us accelerate growth as we move forward in the medium term.
All right. So new areas that you are really growing in. But what about telecom? That has really caused a dent in the last quarter. How do you see the outlook going forward? And is it sector specific?
I think it's, I would say, client specific at this point, because leadership changes, strategy changes, all of that drives a certain new strategies, and that would have its own implications on spending. I would not broad brush it across sector or across geographies. That's why I was very careful about calling out specifics rather than giving a broad brush macro as a factor in whatever happened in last quarter and also the future.
Right. Mr. Vijay Kumar, when we talk about the guidance that you have given, of course, the guidance estimate is lowered in terms of the revenue, but in terms of the EBIT margin, you have upgraded your guidance. So how does this math really play out? Where is the profitability looking to improve, and what is the reason behind that?
So actually, if you take our FY25, we were generally in the 18% plus range. And in FY26, we had guided for a slightly lower margin. And we are just getting back to that 18% at the midpoint. Because we have taken a lot of steps in the past, in the last 12 months. And all of that will help us to get to this 17.5 to 18.5 guided range.
All right. And when we talk also about the new acquisitions, it is stated that you haven't really accounted for those in your guidance. Can you share the timeline and what could be the uptake coming in once the acquisitions are completed?
Actually, the timelines are a little bit fluid because it is waiting for certain government approvals. On a full year basis, I mean, if you take 12 months post-acquisition consummation, it should give us a 1.5% increase in growth. But at this point, we are not able to put a definitive time frame when these acquisitions will close. But whenever it closes, 12 months after that, we would have delivered 1.5% incremental growth.
All right, so 1.5%, but on a yearly basis. So even if it hits you like in a 1 or 2 quarter, it can have some bit of impact in your next quarter. And that is incorporated. Is it part of the guidance that you have already stated, the band, or can it be over and above the band that you have stated in guidance?
Yeah, right now the acquisition impact is not factored in the guidance. So whenever the acquisition gets completed, we will add, and whatever subsequent quarter, we will kind of upgrade the guidance based on the acquisition.
All right. So there is likelihood that before 1 year gets over, the acquisition could be completed and the integration could be done?
Certainly.
All right. So then there is a chance that you could, even in a good year, look at outperforming the guidance that you have already stated. What is the likelihood of that?
I mean, it's very clear, right? We've given a guidance of 1 to 4, and if acquisition happens, it will get proportionately increased. And it all depends on how the next few quarters go.
Right. We are just penciling in all the factors that could be really coming in outside of your stated numbers, Mr. Vijay Kumar. Now, in terms of the AI focus, what is your sense in terms of the way your business is growing and also the overall noise that is really developing? How is HCL Tech really positioned to take up this challenge?
Yeah, we have 5 strategic pillars that we are focused on. First is to proactively transform all our services by infusing AI without even waiting for clients to ask for AI-led transformation and services. So that's number one. The second is to develop differentiated IP, which helps clients scale AI adoption within large enterprises. And third is launch completely new services, AI-led services like AI engineering, physical AI, AI factory, AI-led marketing services, and a lot of IPs and platform-led revenues. That is the third pillar. And the fourth is to build on some of the partnerships like NVIDIA, OpenAI, Anthropic, and all of these partnerships. And the fifth is, of course, the people transformation. We are upskilling our teams to categorize the entire 227,000 people into AI builders, AI super users, and AI human-in-the-loop decision makers.
Right.
And transformation is a multi-year journey, but we have a good template and we are going about it in a very structured manner. Right. So I think these 5 pillars and 5 key strategies helps us to grow our AA revenue. We called out advanced AA revenue. It's already $620 million in annualized revenue. This is independent of this is whatever we do in service transformation, embedding services to deliver, embedding AI to deliver services, that is not excluded. That is excluded, and our advanced AI revenues are completely new revenue streams.
That's right.
That we've been talking about.
In terms of deal wins, it has been a softish quarter. What's the outlook going forward? What's the visibility?
I think we should see similar deal wins, and we think there is a little more uptick possible in the first 2 quarters from what we are seeing. Otherwise, I think the pipeline is good. It's quite broad-based, and we feel pretty confident of a good booking trajectory.
And it's also year-end new financial year is starting now. In terms of the numbers, what are we seeing in terms of the increments, hiring, as well as the attrition, or if any layoffs?
It's not due now. It'll be expected in July, and we will probably talk about it in the next quarter. And attrition has been stable, and we've grown our people count by about 1.5% last year. So it will be very dependent on growth and the projects that we win and all of that.
Close to the low point of the day for HCL Tech, even while the management is speaking, down about 8.8%. And, well, it's taking a bit of a hit. On the other end of the spectrum, one of the stocks that was buzzing quite a bit this morning on account of an order win, BEML. It's cooled off just a tad bit, but still trading with gains of about 2.5%. We're going to speak to the management about the securing of a 590 crore order from the Ministry of Defence and what this means for the path ahead. But before we do, let's set the context and go to Varsha to talk not just about this latest order, but how the book looks right now. Varsha?
Well, this is a major defense order that the company has won of rupees 590 crore, which involves the supply of trawl assemblies and which will boost their near-term defense pipeline execution. Onto the recent order wins, they won $36.38 million Middle East earth-moving equipment export order, also secured first ever overseas metro rolling stock order with this $60 million. Total international order book with this stands at around $107 million. And they've also signed joint bidding MOU with Delhi Metro Rail Corporation. Onto the order book and segment mix, current outstanding order book stands at around 16,300 crore. They're targeting to cross 20,000 crore order book in FY26. Well, 68% of order book is coming from rail and metro, which is followed by defense and mining at 25% and 7% respectively. Talking about the aggressive rail and metro expansion, they have been approved 1,500 crore debt finance Greenfield Bhopal plant, and phase 1 will add 300 car per year to current 200 to 250 capacity, and multi-year domestic opportunity size is at over 15,000 cars. Lastly, on the new growth segments, tunnel boring machines and maritime cranes are some of the new growth areas wherein TBM development will need 2 to 2.5 years, while maritime cranes will contribute after 3 to 3.5 years. Management is expecting 5,000 crore revenue from maritime cranes in the next 5 years.
Okay, so that's a very comprehensive snapshot and perfect ahead of our conversation with Shantanu Roy, who's the CMD of BEML. Mr. Roy, hopefully we've been able to provide a good picture of all of the operations that you're currently undertaking. But I want to get into the specifics of this latest order, which is a 590 crore order from the Ministry of Defence for the supply of trawl assemblies. From the longer standpoint, how important is this order? Of course, it shows up your near-term revenue, but is it strategic in nature?
Good morning. Yes, it is strategic, and it also consolidates our position for the combat engineering segment. So trawl is, it comes from the family of demining mining equipment, which are put on the combat vehicles. The trawl is to be fitted on T-72, T-90 tanks. And we have earlier executed the track width mine flow, and we are doing quite a few other mining equipment, basically the combat engineering equipment. So it adds to the family, it adds to our it consolidates our current portfolio. And the trawl is a very comprehensive equipment. It has a roller, it has electromagnetic device, it has a power pack of its own, it has a track width mine flow, and it will help the Indian Army to navigate the minefield areas, breaching the minefield areas.
Interesting. So, when we were talking about the split of revenues, Mr. Roy, and we were talking about certain products that would come into the fore in a couple of years, and you're talking about even the maritime requirements, right, for the cranes. If you look at this and you look at the trawl assemblies, what is the kind of contribution that you anticipate it will have in the coming years?
You see, the trawl assembly, the order value is already known.
Yes.
So in future also, it may contribute, a similar number. But the real growth driver will be the rail and metro sector, as I can see. If you look at our current order book, so rail makes up around 66-67% of that. 23% comes from defense, around 5% from mining, and the silver lining is the $107 million order book that we have for international business. It also makes up for a sizable chunk. We are also aiming at further international orders, especially in the heavy earth moving segment, as well as for the metro and rail rolling stock. So that is going to be one of the major pillars which will drive the growth of BEML over the next 4 to 5 years.
Mr. Roy, a very good morning to you, and so much focus because of the defense orders. But since we're speaking about rail and metro, there were some stalled metro projects. Can you give us any update? And this was from what we saw last quarter. Can you give us any update or movements there?
I'm not aware of any stalled metro projects. Yes,
I would say delay in beginning, if I could say that technically more correctly.
I won't say there is any delay. Bangalore Metro, we have delivered around 6-7 train sets last year. It has taken off. Mumbai, this year, the bulk of the Bangalore Metro will be executed. We will start delivering the Chennai Metro. We will again start the 33 train set order for Mumbai Metro this year. Yes, some of the orders which you were expecting to secure last year, it has rolled on to the current financial year, but it is very much on track. There are some new tenders also which are out in the metro. So 26-27 should see at least 3-4 major metro orders being finalized, and which will augur well for BEML.
Fair enough. So the ones that got rolled over, any kind of details that you can give us on the extent that have been rolled over and what you expect to come through? I think Bhopal is one that you're looking at.
No, Bhopal Metro it is being executed by some another company.
Okay.
The tender that is out is currently the Chennai Metro, and for Delhi, there are 2 tenders which are out for the metro rolling stock. We will also expect some more metro tenders coming out from the Mumbai area. Apart from that, some more tenders from Andhra we can expect this year. Bangalore next phase we can expect this year. So these are the metro orders, that are in the pipeline. Metro opportunities, I would rather say, which are in the pipeline. In fact, for 26-27, as I've already mentioned earlier, we have an opportunity size of around 40,000 crore, which is mainly led by 70% from the rail and metro sector, 20% from defense, and 10% will be from the mining or the heavy earth moving segment. And we will aim to get at least 50% of these orders. So let's see. Only time will tell. We are working out the strategies for achieving the stated goals.
Wow. Mr. Roy, good morning. Neeraj here. Just so I have a follow-up on just that. 2 questions on that, just that. On the rolling stock requirements, I believe in the February call, you have stated that the requirement could be about 15,000 cars, and you hope to bag 50% of that, which is 7,000 cars, or maybe 4 or 5 years, if I'm not wrong.
Yes.
Could that be a linear order bagging curve, or could it be lumpy? And will we see lumpiness in FY27 itself, or FY27 seems to be on track for a linear growth?
It's very difficult to say whether it will be linear or lumpy. So generally, it has been seen that it is always a sinusoidal curve, right? It is cyclical. So 26-27 should prove to be an exception to the earlier years that we have seen. And the same trajectory may not be there for the coming years, but yes, in totality, for the next 3 to 4 years, the numbers that you just mentioned, they are going to be finalized. That is for sure. Now, which year, how much it gets done, that only time will tell.
But FY27 should see a good number. I presume that's the takeaway that I have from your answer on the rolling stock. The second question, sir, is on the number that you mentioned, that between the three areas, you foresee an opportunity size of 40,000 crores from which you hope to bag about 50%. So circa about 20,000 crores. Now, please help me understand, sir. As I look at the numbers for the last 3-4 years, FY22 or March 2022, we were at a revenue base of 4,300 odd crores. We've closed 2025 at 4,022 crores. Trailing 12 months is 4,200 crores. So we've kind of maintained that revenue run rate, but the order booking is looking strong. When do we break out of this? Could FY27 be the year when the growth on the top line comes by, and what would be a 3-year trajectory maybe?
Let us understand, for a sustainable revenue, what is needed. As a rule, the revenue is generally 1/3 of the order book, of the executable, of the total order book, and out of which, 100% cannot be executable in 1 year, right? So as we increase our order size, what is important is that executable order book throughout the year. In the past, what we have seen is that Q1, we do 10%, Q2, 20%, Q3, 30%, Q4, 40 to 45% also. That trend has to be broken for us to break out from the earlier numbers. And in 26-27, we have that kind of cushion with us where we won't have to, run for orders. The current order book will enable us to perform equitably or almost equitably in every quarter. Because, again, the rail and metro orders, when the order comes, it takes 2 years to develop a proto, and after that, the bulk production starts. So 26-27 is that year when the bulk production will happen for most of the projects. Couple of projects, the bulk production will go into the next financial year, that is 27-28. So 26-27, 27-28 currently looks much better in terms of the available orders, in terms of the executable orders that we have on hand. At the same time, it is very important to build up the order book. In order to further grow the revenue, it's very important that 26-27, we build up the order book by at least, 70% to 80% of the order book that we ended the year with. And that should help us for years beyond 28-29, beyond 27-28, 28-29, 29-30. So at the medium term and long term projection, if we talk about, then it's very important to build on the current acceleration, the current velocity that we have in the order book, and build it up to such a scale that 1/3 of that can be executed year on year.
Fair enough. Mr. Roy, just want to understand, and I know you maybe not be able to give us too many specifics, but there was a one-off provision in the last quarter which had a bit of a negative impact on your margins. Are we back to mean or back to the area before? You think margins are going to come back to where they were?
Let us see. I don't want to speculate. We are in the silent period, so we need to for another month or so. But yes, it is. We have been very open about it, that it was because of some legacy which we had to sort out. And the important thing is that the project is back on track.
Fair enough. Just wanted to ask about your mining division as well, because we've spoken about defense, we've spoken about rail and metro, but let's talk a bit about mining and the kind of growth that you're expecting in the mining and construction segment. What are the mining order picture looking like? What is the mining order picture looking like?
Fortunately, this year, as we start, we are assured of some big ticket orders where we have already emerged as L1 during the last financial year. So this year we should look at order inflow from mining itself, at least 700 to 800 crores, plus some more orders we are expecting from the international business, from the international market. Already one such tender is out from Tunisia, which is valued at around 110 million euros. The order that we received from West Asia, that value does not include the maintenance. That contract has a provision of 5 years maintenance plus 7 years optional maintenance. So that will further add to the order value. But again, it may not be sustained. What I see is currently the mining vertical, the heavy earth moving vertical, it will grow at around 5% year on year until unless we diversify. We are making efforts to diversify into surface miner, which will be required in future. I'm not so sure about the underground mining equipment. We are yet to start work on the underground mining equipment. But what we are looking for is alternatives like the tunnel boring machine, like the maritime crane, so that this particular vertical, whatever is the downside, it may happen in the coming few years, it can be taken care of by these alternatives, by these diversification strategies.
Thank you for joining us today and answering all of our questions, Mr. Roy. That's the management of BEML. Stock in focus because of a 590 crore order from the Defense Ministry, but there's so much more going on with this company. It's in rail and metro, it's in mining and construction, and we've talked extensively about all of those businesses. All right, let's shift focus to the real estate sector. JM Financial says India's real estate market is seeing a clear shift towards premiumization, even as volumes show early signs of fatigue. We're going to be speaking to Sumit Kumar, who has authored a report for JM Financial Institutional. He analyzes the space for them. But before we get to that conversation, Mahima joining in to set up.
Right. So, Tamana, overall, the report, of course, talks about how overall demand is shifting towards premiumization with fewer units but higher ticket sizes. What it also mentions is that the mid-income demand remains resilient, whereas affordable housing is structurally still weak. Supply has started to kind of outpace sales, indicating early signs of build-up as well. Prices have seen a strong growth, 60% since 2020, but remain moderate over a longer cycle. Sector has seen a massive consolidation. Redevelopment is something which is emerging as a key supply driver, especially in areas in Mumbai. Senior living remains as a niche segment with limited scalability, and near-term demand may see volume softness, but value resilience will be there due to premiumization. Now, FY26, if we talk about how trends have been where real estate space is concerned, it ended on a somber note as housing sales sort of decreased by around 7%. Launches were, however, by value did surge by around 31%. Unsold inventory increased to a 20-month high, and average prices, unit sizes as well as ticket sizes rose year-on-year basis across most major cities in March 26. Now, valuations of real estate companies have corrected. And this is on account of falling housing volumes amid the kind of deteriorating affordability that's there. So I think it's important to understand as to the way we have seen correction in the entire sector, and now that valuations have corrected, what is the outlook going forward? So this is the overall view of what's happening in the real estate space.
Thanks for that, Mahima. Let's get in Sumit Kumar from JM Financial Institutional Equities. Sumit, good having you. Thanks for taking the time out. What's the central prognosis? Do you reckon that we are at peaking out of the cycle, or is it difficult to say that right now?
So hi, good morning, and thanks for the opportunity. I think we are near to a peak, you can say, because the sector has been consolidating for the last 2 years. If you look at the volumes that the top 7 cities have recorded in FY25 and 26, that has been in a range of 650 to 675 million square feet. So I think this sector is consolidating a bit. My guess is probably we'll see a similar kind of a trend for the next 1.5, 2 years. And then probably based on how the macro look like for the economy, I think that would be the opportune time to take a call on where the sector is going. But for the next let's say 15 to 24 months, I think the trend should continue where volume should be more or less flat, and there should be a stable, sustained price increase driven by improving mix, because we've seen the preference for branded premium homes, and that trend should continue, as well as certain price hikes that developers will have to take to cover rising costs because of the West Asia conflict.
Sumit, very good morning to you. Just trying to understand that, are you seeing a divergence in residential and commercial in terms of volume growth as well as pricing?
So yeah, I mean, there are two different asset classes move very differently. The monitorables or the KPIs are also quite different. I think if I look at office, the demand is driven by enterprise demand. Commercial real estate, 60% of the leasing happens through the services sector. A lot of that demand is led through GCC. So they have done well post-COVID. Once the work from home phenomena faded out and people were back to office, we have seen gross absorption and net absorption at a pan-India level growing at 18-20%. This year it was a record year with about 55 million square feet of net absorption, about 75-80 million square feet of gross absorption. So and you have seen the re-rating in the REIT portfolios as occupancies improved and the numbers improved. The rate cycle also helped. So the re-rating for the REIT portfolios have already happened. From here on, the growth will depend on the growth and obviously the view on the risk-free rates or the benchmark rates. On the residential side, obviously we are at a stage where the income effect and the wealth effect hasn't been that great to really have a very constructive view on how the volume growth will be for us. So a bit of a divergence, but yeah, both move differently anyways.
Got it. Okay. Well, out of time completely on this segment, but Sumit, great having you for this brief perspective. Thank you for taking the time out and being with us today.
Thank you.
Time for a very short break. Back with a big market voice, Hartmut Issel of UBS Wealth Johnson. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
कुछ खास होने वाला है।
Real was always her rebellion. Sania Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise.
back with India Market Open right here on NDTV Profit. Now, we know that the persisting Iran conflict, or at least the uncertainty around this, could bring in a GDP slowdown while inflation pressures already higher than expected. And against this backdrop, UBS has downgraded Indian equities to a neutral rating as well. Well, the question to Hartmut Issel, who is Head of Equity and Credit APAC and Chief Investment Officer at UBS Wealth, is how does he see the near term because of all the developments that have happened? And Hartmut, thank you so much for joining in. And usually we love doing long-term conversations with you, but these days the near term has become more important simply because it's very difficult to crystallize thoughts in such an uncertain environment. And Hartmut, we thought in the morning when we were talking about it that what has happened overnight with this extension of the ceasefire is effectively only increasing the uncertainty. Would that be a fair assessment?
I wouldn't go that far. Right? The way we can think about it, and also the reason why we have said as a house, now this is a temporary conflict, is look, 6 months down, slightly more than 6 months down the road, there's a midterm election in the US. But even if you look at it from an Iranian point of view, eventually you need to also have exports on the oil side. So high oil prices is not enough. You also need to be able to ship them out, etc. So I would still argue that before long, or more of a temporary situation where both sides come together and ultimately find something. This is what we have also seen a couple of weeks now. So I would still not assume, end of the year we're still meeting again, and then we still have that conflict going on. It should be finished before that.
Hi, Tamanna here. That's, one of the most optimistic takes I've heard so far. I just want to come back to you in a bit more detail on that. What are the signs you're seeing that energy or the appetite to fight more is flagging on both sides? And is that something that maybe a lot of asset classes are penciling in?
Yeah, and we see more and more countries chiming in, both here in the region, in APEC, and of course the Europeans, we also know that, sitting together and saying, okay, what can we do when all of this is settled? So I would say there's some moves. Yes, of course, we would all prefer if everything had been settled by now, but we can on the other hand also not say nothing has moved since this all started. So I mean, there are moves in this direction, and especially if, as I mentioned before, we think about the incentives of different governments, not too many governments in my view that have an incentive to keep this on for 6, 9 or even 12 months.
What's the kind of timeline you see this wrapping up by? You talked about the midterm elections. Is that the sort of outward mark before which you are estimating this wraps up?
I would say a couple of weeks, before everything is completely officially settled, could happen, right? But even here, I wouldn't say normally, right? Should we say 4, 6 months from here? Right? Only then we're ending things. Normally, you would expect it to happen a bit earlier and coming to the midterm election, right? Because you also want to give the voters something to think about, not only in September or October, but probably before that. So I would argue maybe a couple of weeks more is possible, but more for the shorter term.
Hartmut, you are effectively saying that the US will decide when to close it, and Iran will be happy to play the game if the decision is in their favor, and you giving it an outer limit of 2 weeks odd. Would that be a fair summation?
Look, I cannot pinpoint it on exactly.
Yeah, agree.
Sure, but what we have seen, if we compare it with the first day, when all of this started to happen, when we see developments from different countries being in place, and then, but in terms of incentives, I wouldn't say only one has the incentive and one decides. Right? They have to come together, certainly, and eventually everybody has to agree. But incentive-wise, again, I don't see why any of the sides really has an interest to say, 6 months, 12 months from now, we're still at it.
Which is a very, very fair point. But therefore, the question then is that if this comes to a resolution, let me not qualify it with adjectives, it comes to a resolution which the world accepts as a resolution, is there juice in equity markets, for example, in India, or could the damage from higher crude prices weigh in on valuations and foreign interest?
Yes. Two things, right? The oil prices, of course, they will not come down a lot immediately. So every inventory has to be filled up, etc. But then, as we know, financial markets, of course, then they will say, okay, once we really everything is clear, we have a solution. They will not necessarily wait for all of this to priced in. So what I would argue is, if we start with the US, for example, yes, we do towards the end of the year, we do see upside also for several other equity markets. Coming to India, some upside, I think, is also possible. More coming from the earnings side. I mean, if you look at the earnings season, it more or less plays out the way we had thought, i.e. that we're accelerating a bit the earnings growth, which came from a low base in the last fiscal year, where we are thinking a little bit sharper this time is, yeah, but what about the valuations of the market, right? That's always the other side. And here, of course, with higher oil prices, or energy prices, I should say, it's not only oil, especially for India, right? Gas prices also play a role, etc. And of course, what the government tries to do, like many governments in our region, right, is to try to help, as one would expect the government to do it. But of course, that goes in the fiscal side, and that gives, for example, on the 10-year also for India, right, that doesn't necessarily give us comfort that the 10-year yields will gonna come down a lot, which you need for higher valuations. So we see, if I mix the earnings and the valuation side in, bit upside for, let's say, the Nifty, for example, possible for India, but will it be the usual that we see, perhaps double digits? That's a bit hard to argue right now.
Do you have a Nifty figure in mind for end of the year after everything that's happened, Hartmut? And do you see any resilience, pockets of resilience in the Indian equity landscape?
Yes, maybe let me start with the resilience. What I like a lot, and we have mentioned this also to our investors for quite some time, is the biggest sector, so certainly the Nifty, so financials, or especially banks, it is coming. We had two drivers in place already. I mean, the loan growth was already double digit, and it stays that way. Asset quality is no longer an issue, but hasn't been for a while. So the third driver, which is also important, but is of course the interest margins that we're seeing. And if I look at just the last couple of days for the big banks now, yeah, slowly but surely they're certainly not coming down anymore. They seem to start to go up a little bit. This is also a trend I would expect for the next couple of quarters. So all three drivers here for the banking side, for example, are in place, and this would certainly be helpful. It's a bit like we expected.
Got it. Hartmut, just a follow-up to an earlier question about foreign interest for Asian markets, which got impacted by energy, and it happened across, right? Korea, Japan, China, India, etc. The conversation at the start of 2026 was that when the AI trade were to reverse, India would benefit simply because Korea, etc., have outperformed Indian markets so much. Do you reckon that once this conflict ebbs and a couple of months go, could foreign interests come meaningfully to India because valuations have been a bit more reasonable and there has been a massive bout of underperformance versus markets like Korea?
I would expect some of that. If I put the three driver that I see for our regions here, let's say APAC in general, right? So certainly there is AI, because we have three markets in the north that do this: China, Korea, Taiwan. Then we have what we call value up, which is a completely different driver. Japan has started it now. Markets like Singapore, some others also following it. And then I would put them in the category, rebounding laggards, I would call them. It's markets like India, for example, also Indonesia, where the earnings growth wasn't that strong, at least still positive in India. And in Indonesia, it was actually outright negative last year. But they're coming back. That's what I mentioned before. Right? Earnings growth in India seems to me it's starting to reaccelerate to some extent. So even if it's not an AI market, which is true, as long as that happens, and I think that should continue, I would be surprised if there were no interest at all on the foreign side once all this is over. Of course, India is seen as a stock market a bit more vulnerable to the energy side, fair enough. But then again, our belief is that it shouldn't take that much longer for these things to be settled. And then why wouldn't there be some interest there too?
Because you spoke about financials, the other end of the spectrum right now is IT. And there is a bit of a debate on whether there is light at the end of the tunnel for Indian IT companies. Wondering what you make of it. I know there is no AI trade in the Indian landscape right now, but will Indian IT companies actually survive that shift?
That's interesting. Also, if we look a bit global, software stocks, IT services stocks, it's not just the India stocks, right? It's anybody who, and traveling as well, right? So we had a couple of sectors where we see they came down, where I think the market also went or took it a bit too far. And we see right, in the last couple of months already, we see the end clients also for the Indian IT service companies saying, look, we're a regulated, heavily regulated corporation or industry, right? And we want to tailor something. Yes, if I get a language model, that's great. Many of us use these, or many also of the, pretty much all of the companies use them, but you need something tailor-made, right, to propose your value propositions. You are regulated. You cannot just only solve that with a language model, and therefore, and you have legacy systems in the back end, so somebody needs to integrate them, and more occurs to me, who will integrate them? The same companies have always integrated them.
Yeah. Okay, that's an interesting way of looking at it. Hartmut, thank you so much for speaking with us. As Hartmut Issel, Head of Equity and Credit APAC and Chief Investment Officer at UBS Wealth Management. Meanwhile, markets taken a dive for the worse. The Nifty down nearly 200 points, and you can blame the IT pack for it. If you pull up the Nifty IT, interestingly, there was an analyst on the show today, Neeraj, who came and said that Nifty IT will give you 13 to 14% returns as an index in the next few months. Well, if you're looking for lows, here they are, about 3.5% down on the Nifty IT. Painful over there. ABB India, those lines on your screen, ABB India is in focus after the India order inflow details are out. Sharp spike over there. These are commentary these are comments coming from the global team. ABB Global says the India order inflow in the first quarter of calendar year 26 has grown 26% year on year. Analyst estimates for order inflow growth was 7 to 9%, so far above. ABB will be investing approximately $75 million in Indian manufacturing and R&D. So some commentary from the global the entity, ABB Global, which has got the ABB India stock up and about. But let's talk about Trent. Big expectations from its Q4 numbers. We saw that at the opening session as well, right when markets opened. All of that has cooled off now, along with the market mood. But Mahima joining in to tell us what the street is expecting from Trent.
Right, Tamana. So, when we saw Q4 business update coming in, we saw that spike coming in the counter as well. And this is on account of the revenue growth coming in at 20% versus that of how it's done in last 2 quarters of 17% and 15% respectively. Plus, the store additions came in on a very strong footing. And that's why, the stock did see an uptick when the Q4 business update came in. Now, in terms of where estimates go, EBITDA is expected to see an uptick of around 22%. Margins might see a slight uptick at that 16.5% mark versus that of 15.9 earlier, and profit might see a growth of around 7% as per Bloomberg estimates. What you can expect from the earnings coming in, revenue growth better as compared to the last 2 quarters. Strong store additions, they've already announced that, but overall average revenue per square foot might see a reduction on account of the expansion, aggressive expansion that they're doing in terms of store additions. Citi has maintained cautious stance due to competition and store cannibalization. Morgan Stanley expects Q4 standalone EBITDA margin to improve by around 100 basis points, and Macquarie believes that same-store sales growth momentum will improve going forward as well. What to watch out for? I think stable like-for-like growth is something that we'll be watching out for, and improving throughput in the new stores is also something that we'll be looking at. Throughput ramp up in new stores and commentary coming in on that front, and sustainability of store addition moment also going forward. So this is the overall view of what you can expect from Trent earnings that will come today, probably post-market hours.
All right, we'll keep an eye on that. Thank you for that, Mahima. That's all the time we have really on India Market Open this morning. It's been quite an action-packed show, but from Neeraj, I and the team that put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते एनवी सर से लाइव एनडीटीवी युवा पर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock.
You're watching NDTV Profit. I'm Mahima Bachajani and with me is Somit Sarkar. Before we take all your stock related questions, by the way, for all your stock related questions, you can either give us a call or send us a WhatsApp on the numbers that are flashing on your screen up there. But before we start doing that, let's take a quick look as to how the markets are doing. Let's try to pull up the Nifty 50. The Nifty 50 right now is down by about 200 odd points, largely dragged by the Nifty IT index. We're seeing the downtick coming in largely on account of HCL Tech. You have your bank Nifty also, which is seeing a downtick of around 0.5 odd percent, hovering around the 57,100 odd levels. Let's try to pull up the Nifty 50 heat map to see as to what counters are contributing to that pressure coming in. HCL Tech now down by about 9.6%. So all your IT names, Tech Mahindra, Infosys, TCS, down in that range of 1 to 9%. And you have some other banking names, ICICI Bank, which is also seeing a downtick of around 1.5%, followed by Shriram Finance, also seeing a downtick of around 1.5%. But on the flip side, you have Nestle still upholding the gains that it saw yesterday, closed 8% higher. Today also seeing an uptick of around 2.8%. Tata Consumer also up 2.5%. HUL also up 2%. So all your FMCG names ahead of their numbers coming in are seeing gains of about 2% each. NTPC, Tata Motors, Coal India are some of the other names that are doing fairly well in trade right now. Let's try to pull up the sectoral heat map and see as to what that screen is looking like. You have, of course, Nifty IT tanking the most, almost 3.7%, followed by Nifty Bank, which is also down by about 0.4 odd percent. But on the flip side, you have Defense, FMCG, Energy, Realty, which are doing fairly well. Nifty Energy gaining the most, up 1% for the counter. Let's try to pull up the broader end of spectrum as well. The mid cap 150 and the small cap 250. The mid cap 150 is largely flat, but the small cap 250 is seeing gains of about 0.4 odd percent. So not in tandem with what the benchmarks are doing right now. Quickly, the BSE 500 before I start taking all your stock related queries. The BSE 500 as to how stocks are faring there. Suntech Realty seeing gains for almost 10 odd percent, and this is on the back of the numbers coming in. ITI, PNC Infra, ABB India just a while ago, ABB global numbers global commentary came in, and on the back of that, the stock has seen a sharp spike. HCL Tech, 361 ma'am, Tata Elxsi, Tech Mahindra are some of the other names that are down in trade today. But with that, let's also welcome in our guest for the day, Mahesh Ojha, VP Research Business Development at KC Securities, and Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining us now. Welcome to both of you, and a very good morning to the both of you. Mahesh, the first question that we have today is, and anybody who's holding HCL Tech right now would want to know as to what should they do with their holdings. We don't have the name of the viewer, but overall your view, considering how the earnings have fared, what should one do who has HCL Tech in their portfolio?
Good morning. So I think numbers are below estimate, so market reacted sharply. So I think valuation-wise, if you're looking from some upside can come, but yes, if it is a very disappointed number, so we have seen sharp reaction on HCL Tech. But yes, from these levels, some upside can come slowly. After that, what we can review. Levels are attractive, but we are not much bullish on HCL Tech. So message estimates, so any upside, then investors should try to exit from the counter.
Okay, all right. The next one is coming in on Suzlon. Sanjay from Bengaluru says that he's holding 3,114 odd shares at levels of 41. Says that he wants a short-term view on this one, considering 6 months of time horizon. Vaishali, your view on the charts for Suzlon?
Hi, very good morning. I think Suzlon is in a very strong uptrend. Near-term resistance we do see at 54 levels. So I think if 6 months is the horizon, I think he should continue holding with 48 as a stop loss. And once we see this stock moving above 55 levels, this can go towards 62. So I think hold and buy in dips, 47, 48 should be the support level.
Okay, the next one is coming on Zentech. Ramaya, who's writing us from Nellore, is asking about Zentech. She's got 145 shares bought at the levels of 1430. She's sitting on profits of over 47,000 rupees. Wants to know from a 2 years time horizon, what should be the target price that she could expect on something like a Zentech? Mahesh, I know target price for the next 2 years would be a difficult call, but overall your view on Zentech?
I think that largely company is doing good. So from a order perspective, from education perspective, I think company is doing good. We have seen lower level also, but I think from a 2 year horizon, if anyone holding, then I think they can hold the same, and easily we can see 15 to 20% upside moment in 1 year horizon. After that word, we can review on the same. So I think still 15 to 20% upside we can see in 1 year horizon. After that word, stock can be reviewed as per the quarter numbers.
Okay, all right. So that's the view coming in on Zentech. The next one that we have is on coming in on. In fact, this is a very broad-ended question that Puneet Saxena from Ghaziabad is asking. Says that he wants a suggestion from you, Vaishali, of 3 to 4 stocks that he can safely go ahead and invest 8 lakh rupees and with a minimum gain of 10% in the next 1 month. So the requirement is really wide and the expectations are really high, considering, with consolidation happening in the markets right now. But will you be able to give some stocks that you are tracking right now that could possibly give a good return in the next 1 month?
Yeah, I won't promise the time duration, but I do feel that there are quite a few stocks as far as, especially if we talk about healthcare section. So example, Fortis, we do like Fortis at these levels. Currently, it is at 930. So I would say buy this stock and accumulate with 880 as support. And in times to come, you can see a target of 1100. So that would be one of the stocks. The other stock, which I do like is Steel Authority of India, because overall, as we have seen that, yes, there is a good strength in whole of metal sector, and Steel Authority has given a breakout. So I would say accumulate this stock with 165 as support and look for a target of 200, 210. And the third one, which I would look, of course, look at the power sector. Overall, power sector is really buzzing. So Tata Power is one of the stocks, and 420 would be the support, and one can look at a target of 520. So I don't promise the time period, but yes, these are the stocks which look good to me. These are the targets that I'm looking at. So don't have a stipulated time period, but buy these stocks for a positional target.
Got it. Okay, so that's the view coming in on Tata Power. The next query that we have is coming in, and this is on. Okay, we've taken Suzlon already. This is coming on Nugent Software. Ambika from Chennai is holding 100 shares at the levels of 442. From a long-term perspective, Mahesh, your view on Nugent Software?
I think stock has beaten down largely in a few months. So I think some upside can come up to 540, 560. These range could come easily. So I think they can hold further for a medium to longer term. I think 6 to 9 months at least they should keep in mind. So for 560 level can come for keeping in mind for a target base.
Okay, all right. So that's the view coming in on Nugent Software. But I think Persistent System is the other one which is in focus today on the back of its Q4 numbers coming in. I think the overall, let's try to pull up the stock is down about 4%. Numbers largely in line with what the street was estimating. But I think a broad-based growth across sector did happen, but margins was something which was an area of concern. And I think that is why we're seeing a downtick of around 4% on the stock coming in. Revenue saw an uptick of around 7.4%. But, my colleague Neeraj Shah spoke to Sandeep Kalra, who's the CEO at Persistent System, listening to that conversation.
Sandeep, the benchmarks continue, but these are interesting times because not only it's a confluence of AI-led disruption, if I can call it that, but also geopolitics playing havoc with corporate outlook on business. How do you sum up your quarter and the year gone by, and what do client conversations suggest about what could be in store in the very near term? Because that is the piece which is disrupted.
Yeah. So I'll summarize the quarter and the year, and then I'll come to the questions you asked. So as you rightly pointed out, the Q4 for us came in with a healthy 3.2% quarter-on-quarter, 16.2% year-on-year growth. And in rupee terms, this was 7.4% quarter-on-quarter, 25% year-on-year. Interestingly, this was the year-end as well. So I'll just summarize the year because that gives a slightly longer view to things. So for us, FY26 was another consistent year of execution. Now, in terms of the growth, we delivered $1.65 billion in annual revenue, growing at about 17.4% year-on-year. Now, this is the 24th sequential quarter for us for growth, and this is 3% or more 24 sequential quarters. So that is something we are very proud of. In terms of the profitability, the EBIT for the year came in at 15.6%, and this is a 31% plus growth in absolute terms over FY25. Similarly, the PAT came in at 12.6%, a growth of 33.2%. Now, for the full year, the order book came in at $2.4 billion in total contract value. Annual contract value of this is $1.8 billion. So this kind of puts us in a decent place as far as the next year is concerned. In terms of the macroeconomic situation, look, this war, everyone hopes from a humanitarian perspective and overall business perspective also. We all hope this comes to an end soon. We'll see where it goes. Hopefully, that should come somewhere to a logical conclusion. Obviously, there is inflationary impact of this globally. So far, the customer side of it, the more impact is on the AI side. That is a bigger discussion than the war. And in our mind, the next several years are going to be about service providers who build capability. It is not going to be about the best profitability or the cost side of it. It's going to be the best capability and moving up the value chain. And that's where we are focused. So I'll take a pause.
Okay, and I have some follow-ups there, but I want to read out a line that was there in one of the brokerage notes that I read this morning, that management reiterated their $2 billion run rate target by Q4 FY27, though appeared slightly less confident about strong growth in FY27. Did they read your words on the con call correctly?
So look, everyone has a right to read the body language, whatever else to this thing. All we can say is we have had 24 sequential quarters of growth. Those 24 sequential quarters of growth have come through good macro, bad macro, COVID, no COVID. We went public in 2010. From 2010 till now, our CAGR, compounded annual growth rate, is 17.3%. So if that gives anyone any confidence, look, future no one can predict. We don't give guidance. Our aspiration is the $2 billion. We are on that trajectory. Let the time pan by.
Okay. What within verticals, Sandeep, do you reckon continues to stay strong? I believe BFSI is a large part there, but is there some insight that you can give on the verticals?
So see, again, this is company to company dynamics for each one of us. Now, if we look at it from our perspective, BFSI followed by healthcare life sciences followed by tech seems to be the pecking order in the coming several quarters. And the reason for this is, despite the capability build being good in all of these, the technology segment is the one that is the most prone to adopting the AI part because they are the producers of AI. They are also not a regulated industry like healthcare life sciences or banking financial services. So that is where we will see good growth, but that will also have a good amount of compression in terms of effort. And so the story out there is going to be, while we are growing in volume in terms of the customers, the effort will shrink. Automation and AI percolation will be the highest, followed by the other segments. So that's the story, and we have pretty good customers in each of these segments. So from the last year gone by as well, if you look at it, the pecking order for our company was banking financial services, full year growth at about 28.4%, high-tech emerging vertical 13.8%, healthcare life sciences by about 10.1%. So that's the way we are looking at it.
All right, so that was the management, of course, of Persistent System, talking about what lies ahead of the company. But let's take a quick look as to how the next. In fact, let's take the next query, which is coming in from Naresh Kwalia, who's asking about Vedanta. Now, his question is that whether he should go ahead and buy Vedanta today or wait till the demerger happens and buy it after that. Mahesh, I'll come to you on this one because he's a long-term investor. What is your view on how should one proceed with Vedanta right now?
I think if anyone want to take advantage of demerger, then they could go ahead and buy the same. Still some room in the Vedanta, so they can buy on these levels. Still some room from my perspective that 880, 890 range could come overall after demerger. So I think it's an opportunity for grab the Vedanta in these levels.
Right, so that's the view coming in on Vedanta, but time to look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, I think IT is the one which is weighing down.
Exactly, and most of the sectors are actually in a very tight range, and we see the IT pack is giving a big drag to all the major indices. And look at the names. HCL Tech is down 9%, Tech Mahindra down 5%, Infosys, TCS, all of them seeing selling pressure. Even ICICI Bank, if you look at it, that's also seeing a little bit of profit booking. What's working? We have some consumption names, and Reliance is there, which is in the green as well. But majority of the banking and most of the names are in the red. Of course, the geopolitical tensions which are there, that's also developing, and that's what we are seeing. But after a 3-day rally, we are seeing some profit booking in the markets, and maybe a technical pause will be there at play. The VIX also jumping up. But let's just have a look at the key long build-up stocks, which should be in your radar. Then this includes CoreFirst and Nestle, even though it's not very much convincing. But yes, Nestle is up more than 3% on the back of brokerage upgrades after a strong set of quarterly numbers. Let's look at the short covering candidates, and we'll come to that. Short build-up is a concern here. HCL Tech is down 9%. Very weak set of numbers coming in, and that's also dragging the other IT companies as well. Tata Elxsi numbers were decent, but we are seeing a sell-off here. Long unwinding for ICICI Pru and Persistent Systems here. Nothing much to look about. Almost 50 to 60% of this market is in the red in the F&O space, but Adani Group stocks are doing really well. We had pointed out a positive news flow also earlier in the day. Now we see Adani Power, the stock is up 4%, and even Adani Energy, that stock is up 2% as well. So most of the Adani Group stocks are doing well in trade despite the markets being on the other side. So these are the important stocks which should be in your radar, and that's all in the F&O space.
All right, Chad, thank you so much for getting us those details with regards to where the F&O space goes. But we've Pradeep waiting by patiently. Pradeep, very good morning to you. What's your question about?
Yeah, good morning. Thanks for taking the query. It is regarding PNB Housing. I have bought PNB Housing at 932, 47 shares.
Okay.
What is the upside look like for a shorter term?
Okay, Pradeep, got your question. I'll take this up with Vaishali then. Vaishali, what are the charts indicating for PNB Housing? He's sitting on mere profits of around 2,000 rupees right now.
So, well, if it's a short-term view, then 1010 is the near-term resistance. So, if that is what you're looking at, then one should book profit near 1010. But if it is for a positional trade, then hold on. Let's see if the stock moves past 1010. Then I think it's ready for a further higher trajectory up to 1100 and higher. So, this is the way you can look into your stock and keep a trailing stop loss.
The next one is again a caller query coming in from Bangalore. Anita, you can go ahead and ask your query.
Yeah. Hi, ma'am. Good afternoon to everyone. So I'm having the transformers and rectifier shares of 300 rupees in 1,000 quantity. So what is the long-term and short-term view on this counter?
Okay, I'll go across to. I'll take the short-term view first. So let's go across to Vaishali and understand the view on transformers and rectifiers.
Well, so transformer and rectifier, I think the results were not great and we have seen a bit of a retracement. But having said that, I think continue holding with the stop loss of 280 because we are seeing some strength. I mean, stock, the worst seems to be over. So as long as 280 levels are held on and we see a new round of momentum setting in, this can go towards 380. So this is the way I would look at the stock. But short term, absolutely short term, then we'll keep a stop loss of 290.
Okay, all right. So that's the view coming in on transformers and rectifiers. In fact, the downtick in the counter that we're seeing today is on account of miss in terms of execution when it comes to FY26 guidance, and that's why the stock is taking a knock. But the next question that we have is coming in from AK Bhalla, who's writing us from Jalandhar, asking about SW Solar. He says he's purchased this counter at 184 rupees, 2,000 shares a few days back. Wants to know if he can continue to hold or should he sell and book out, considering that he's seeing profits coming in on this one. Vaishali, he's a short-term investor, so your view on the charts for SW Solar? It's been buzzing since the huge order win it got.
So it's been in a very long consolidation since a very long time.
Yeah.
So I would say just continue holding. 205 should act as a stop loss. And if by chance the stock moves above 240, 240 is the near-term resistance. So if we see the stock moving above 240, then I think it would gain further strength and it can go towards 280, 300. So I think risk-reward ratio at this level is very favorable. Continue holding.
Query is coming in from Sudhir from Bangalore, and he wants to know whether is it a right time to enter ICICI Bank at current levels. Mahesh, any view on ICICI Bank? Should Sudhir buy at current price?
Definitely, they can go ahead and buy the ICICI Bank because the numbers are very pretty. And in banking sector, if you're looking from a peer comparison, then ICICI is outperforming. So from my perspective, in medium to longer term, ICICI would be preferred. And if you're holding for longer term, 1,650, 1,700 level can be achievable. Bank really doing good in NIM, in NPA, and all the parameters. So my perspective, hold from medium to longer term perspective.
All right, so that's the view coming on ICICI Bank. I think we've got Prashant who's calling us from Bengaluru. Prashant, a very good morning to you. What's your query about?
Good morning, madam. Thanks for taking my call. So basically, I hold 70 quantity of Tata Motors shares. Now it is split to commercial vehicles and passenger vehicles. I bought it 5 years ago at 136 and 162 rupees. Now, should I hold these for further profits or should I book profits?
Your question is valid, Prashant, and you've been a patient investor. So, Mahesh, your view on Tata Motors overall, what should Prashant do? Should he book out?
If you're looking from a Tata Motor perspective, I think limited upside is there. So from a long-term investor, I would suggest partially profit book on these levels, and rest can be hold. Because largely, if you're looking 15 to 20% upside can come slowly, gradually. That will take some more time. So from my perspective, partially profit booking is advisable.
Okay, so that's the view coming in on Tata Motors. But Mahesh, as Vaishali, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one is coming in on MTAR. Chandrasekhar from Bengaluru wants to know whether making an entry right now makes sense from a long-term perspective or not. Mahesh, your view?
The stock has done really pretty well in a shorter term time. So I think wait and watch. If any downside, handsome downside, then they can enter.
Next query is from Arvind, and he wants to know whether should he continue to hold Canara Bank or not for the next 1 year. Mahesh, any view?
They can hold the same.
Welspun Corp bought 100 shares at the levels of 570. Right time to book profits. Vaishali on the charts.
Continue holding with the trading stop loss.
Chandan Jain from Karnataka is holding few shares of Tata Consumer. He's saying that the stock has not been performing for the last 2 years. Should he hold for short term, Vaishali?
Hold. FMCG is taking momentum.
Eicher Motors or Hero MotoCorp, which one is a better bet to invest right now from a long-term perspective of 5 years? Mahesh, your view?
I think Hero MotoCorp can be preferred.
Harsha from Andhra Pradesh bought 22 shares of Policy Bazaar at a price of 1,750. He wants to know whether should he continue to hold or sell. Mahesh, any view?
There is a longer term view, they can hold the same.
Bajaj Finance from a slightly long-term perspective. Vaishali, what are the charts indicating? Is it a good buy? Guneet from Mumbai wants to know.
Accumulate would be a better strategy.
Right. GK from Bangalore is holding few shares of GE Shipping. Now for the next 3 to 5 years, should he continue to hold this, Mahesh?
Yes, definitely they can hold the same.
Hindustan Copper, 180 shares bought at the levels of 315. Venkat Ramani wants to know if she can continue to hold this for the next 12 months. Vaishali, on the charts?
Hold.
Arun bought few shares of Laurus Lab at a price of 648. He wants to know whether is it the right time to book profits, Mahesh?
Partial profit booking advisable.
Anant Raj, buying at the current price makes sense from a long-term perspective. Keshav from Chennai wants to know. 2 years is time horizon. Mahesh?
Definitely they can hold the same from 2-year perspective. Stock can do well.
Bharat from Andhra Pradesh is holding 2,000 shares of PNC Infra at a price of 228. Should he continue to hold or sell? Vaishali?
Hold with the stop loss of 200.
Okay, HDFC Bank bought 1,800 shares at the levels of 778. Our viewer wants to know whether they can continue to hold from a long-term perspective. Mahesh?
Can hold the same, numbers are steady and some upside is there. So from a longer term perspective, hold.
Ashok from Andhra Pradesh has few shares of CG Power bought at a price of 690. He wants to know the short-term target on this. Vaishali?
850 is the short-term target.
Deepak Fertilizers, the target for the next 2 months. Jose from Kerala wants to know about this one. Vaishali?
Deepak Fertilizers currently 1258, near-term resistance 1300. If it crosses, look for target 1350.
Sudhir Reddy from Bangalore has 10,000 shares of Shipping Corporation of India bought at a price of 319. Should he continue to hold this, Mahesh?
I think they can hold the same.
Emcure Pharma, from a short-term perspective, V. Murli from Bengaluru wants to know if you can continue to hold. His buying price is 1618. Vaishali, your view on the charts?
So Emcure Pharma, 1600, 1580 should be the stop loss and hold for a target of 1700.
Sugunakar is holding 42 shares of Voltam Transformers bought at a price of 7,200. Should he hold or book profits? Mahesh, any view?
They can hold the same. Some upside can come. 11,500, 12,000 can come.
Okay, Ola Electric is the next one. Arjun from Jaipur wants a 6 months view on this particular counter. He says whether it will be able to touch 45 in the next 6 months. Vaishali, possible?
For that, 40 needs to be crossed decisively. Then next target is 45.
Bhaskar wants to know, he's holding 300 shares of JTL Industries at a price of 62. He wants to know whether should he continue to hold or sell. Mahesh?
Okay,
partial profit booking in any upside, partial profit booking advisable.
Okay, all right. So that's the view coming in on the last count that we talked about. But, we have Renu Baid joining us on the phone line right now. And, I think Somit has been tracking this closely.
Well, yes, ABB Global, in fact, came out with its number. And what they have shown for the India business, they are seeing a order inflow growth of 26%. Now, I believe analysts were estimating this number to be anywhere between 7 to 9%. So let's get in Renu Baid. Ma'am, is this number that the Global has reported, 26% order inflow, much better compared to what you were estimating?
Yes. So if you look, the global parent, when they report the numbers, this is in USD terms for the India region. So for ABB India listed entity, when you compare, you have to knock off any intergroup orders as well as the export orders which they win. Now, normally, the way the estimates and forecasts are done, we were expecting in INR terms close to about 7% growth in revenues, which in USD term implies flattish or just 2% growth. Street was at slightly higher, about 6% kind of growth on the order inflows. Obviously, this includes exports. So what we see from the group results of 26% India region growth, this implies that overall India region in INR terms would have grown by nearly 32% for them. And this growth definitely is a big beat compared to what analysts and investors were forecasting for this quarter. Even if there is a 5-10% adjustment for intergroup order flows or order flows coming in for exports, Even if we see at least 20% kind of growth in order inflow this particular quarter for ABB India, that would be anywhere between 45-47 billion rupees, which is a beat to what Street was expecting, between 40 to 42 billion.
But one thing to notice here is that on a YTD basis, the stock has already run up 48%. And among capital goods MNCs, if you look at, I believe ABB is one of the most expensive one at this moment. So is there more upside from current levels?
So point number one, ABB has always been the most expensive industrial or capital goods stock, not just now, but for the last 2 decades of coverage that I have been seeing. It has always been expensive. The recent rally in the industrials or capital goods that we have seen is in anticipation of a rebound in the industrial investments and government initiatives to drive investment sentiments back here. And that's broad-based across all companies in the sector. In specific for ABB, if we see, yes, definitely the run-up in the near term was expecting positive tail news from the group release that we saw today. In my view, the near-term upsides are fairly priced in, and I would expect the stock rather to consolidate in the near term ahead of results. Our target price also incrementally suggests that in the near term stock would be a bit weak there. So we have a target price of 71.94 on the stock. And in the near term, we think clearly heading towards results, this quarter margins would be a bit soft. Impact of commodity inflation and QC-related import content would be there in 1Q. Plus incrementally, given the way we have had headwinds on orders and decision making on new projects, especially end of March and April, there could be further the management commentary in terms of recovery or rebound in private sector investments could indicate some postponement on that side. So I think the near term for ABB is fairly priced, and that is also true for quite a few other industrial names that we see, including Cummins, where we think the stocks are richly priced at current levels. Struggle to see upsides there.
Right. Just lastly, wanted to understand, ABB Global in its report also made a statement that they will invest approximately $75 million in Indian manufacturing and R&D. Was that fairly known, or is this a new investment?
Yeah. So a proper press release to this extent was out back in the month of Feb itself of the $74 million investment which the group has highlighted. Close to, as in for the India listed entity, it would be about $63 million of spending coming on the manufacturing side. The rest is in the global ER&D center, which the group owns there. This 560-570 crores of Capex, which ABB India would be doing in the next 12-15 months, is targeting to double up on their manufacturing capacities in UPS segment, in medium-low voltage switch gears, including GIS, in motors, including IE5 range of products there. So clearly, a meaningful step up in absolute Capex numbers for ABB India. 560 crores, a big number compared to approximately 240 crores invested last year. And a lion's share of this investment is going in sectors like end markets like data centers, transportation, renewables, power. So to that extent, we think growth should be relatively strong as we look towards CY 27-28 with higher local manufacturing footprint. But in the near term, 26 will still take some time for overall market and the order flow momentum to pick up.
Well, thank you, ma'am. Thank you for joining us and giving us those insights on the ABB numbers coming in. Well, time for a short break. We'll address more of your queries post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. Viewers who are just tuning in, you can either give us a call on the number that's flashing on your screen up there, or even send your queries to us on the WhatsApp number that's flashing on your screen up there. The next question that we have is from Prashant, who's writing us from Bengaluru, asking about data patterns. He says he wants to invest around 1.5 lakh rupees from a time horizon of 2 years, wants to know the right entry price, and should he invest the entire 1.5 lakhs in one go, or should it be in staggered manner? Mahesh?
I think in a staggered manner, data pattern investment can be done on these level also. So I think some upside could come on from these level, but a stock has done pretty well. So staggered way investment is ideally advisable.
Okay, the next query is coming in from Balaji Srinivasan. He's holding 300 shares of Alembic Limited, bought at a price of 115. He wants to know whether should he hold, average or sell. Mahesh, any view on Alembic?
I think they can average on the same. After that, some upside can come, then they can review on the same.
Right, so that's the view coming on Alembic Limited. The next one that we have is on HCL Engineering. Hanumanta from Hyderabad wants to know if he can add more from a 6 months perspective. He's already bought 100 shares at the levels of 788. Vaishali, your view on the charts?
So I would say accumulation, yes, because it's showing further new round of strength. It's crossing all the hurdles of resistances. So I would say yes, buy now. Also with 780 as support, add if it goes in dip, because I think a 6 month horizon, this can go towards 950 levels.
Okay, all right. So that's the view coming in on HCL Engineering. I think we have Arvind who's calling us from Bareilly. Arvind, go ahead, ask your question.
Good afternoon, ma'am.
Good afternoon.
मैम मेरा क्वेश्चन था डोम के मेरे पास 50 शेयर्स हैं 2396 पे मैं 50 शेयर और भी एवरेज करना चाहता क्योंकि अभी किताबों वगैरह का जो इनका सीजन वगैरह है तो जुलाई में मेरे को लगता है इनके रिजल्ट्स वगैरह अच्छे आने चाहिए तो क्या मेरे को एवरेज करना सही रहेगा या क्लासिकल लेकर मतलब जुलाई में के लिए मैं 3 महीने के लिए होल्ड करना चाह रहा हूँ 1 क्वार्टर के लिए बस
ठीक है अरविंद आपकी क्वेरी समझ गई मैं ये वैशाली से लूंगी वैशाली सीइंग द चार्ट्स डू यू थिंक एवरेजिंग 50 शेयर्स मेक सेंस राइट नाउ
मैम मेरा ख्याल रहेगा 2500 के ऊपर अगर ये जाता है तो ऐड करिए बिकॉज अभी तो रेजिस्टेंस पे है सो ऐड करिए 2500 के आसपास अगर जाता है तो फिर आपको और भी आगे मिल सकते हैं 2700 के टारगेट तो 3 महीने का होराइजन है तो आप उस हिसाब से करिए
Okay, all right. So that's the view coming in on DOMS. The next one that we have is on L&T. Sheshadri from Guntur says that he's holding 40 shares at the levels of 4013 for L&T. From the next 6 months perspective, what is the target price that he can expect? Vaishali, your view on the charts?
So 6 months, I think first target would be 4250. Above that, it can go towards 4600.
Okay. The next one that we have is on MRPL. This is from Sushila, who's writing us from Bellary. She's bought it at the levels of 179. 5,227 shares is what she's holding in her portfolio. Short-term targets on this one. Vaishali, this question is specifically for you.
Okay, so keep a range of 178 to 200, 210.
The next query is coming in from Satyan and it's on Max Healthcare. He's holding this counter for the last 1 year. Average buying price is 1040. He wants to know whether should he continue to hold this or exit and buy Fortis. Any view on this, Mahesh?
I think they can hold the same. Largely stock is not doing good, but fundamentals are good, so they can hold the same from a medium to longer term perspective.
Right, the next one that we have is on IIFL Finance. Our viewer has bought it at the levels of 506. What should be the targets that one should be watching out for this one from a slightly long-term perspective? Vaishali, your view on the charts?
I'll just have a look one second.
Sure. IIFL Finance is right now trading at 469. It's down by about 1.5% trading as it stays low point. Vaishali?
Yeah, so I think short term, I would say keep a range of 450 as support and 540 would be the next target resistance.
Right. The next query is coming in from Sandeep from Bangalore. It's on Hindustan Copper. He has 500 shares at a price of 642. He wants to know whether the stock will recover back to his buying price in the next 12 months. Mahesh, any view on this?
I think stock can go up to 600 level, 580, 590. That area could be a profit booking area if anyone looking from these levels. So from my perspective, any upside they can look on the for exit.
Okay, all right. So that's the view coming in on Hindustan Copper. We've got Pradeep who's calling us from Bengaluru. Pradeep, go ahead and ask your question.
Good morning, everybody. See, I'm having 200 shares of Aeroflex.
Okay.
Bought at 149 rupees in June 2024. So I'm a long-term investor. So I wanted to know whether I should hold it for say another 1 or 2 years, or should I book profits at this stage because it has just doubled.
Okay, got your question, Pradeep. I'll take this up with Mahesh. And in fact, if I'm not wrong, we had a conversation with the management yesterday in Small Cap Bazaars. I think you'll be able to find the conversation on YouTube. Aeroflex is what we're talking about.
Yeah, right.
We did have a conversation. You'll be able to, Pradeep, catch that conversation on YouTube channel of NDTV Profit. But Mahesh, by any chance, any view on this particular counter? It's a 4,000 crore market cap company, so it's a small company, but any view on this one?
We are tracking mostly this counter from longer term period. I think stock company is doing very well. So from a longer term perspective, still you have a 1 to 2 year horizon, then you can hold the same. Stock has done well, but company working is very good. So from my perspective, if your view is longer term, then they can hold further from these level also. We are seeing some more upside in this counter from a longer term perspective.
The next query is from Ram from Chennai. He wants to know whether is it a good time to invest in ITC Hotel. He is looking to buy around 1,000 shares. Mahesh, any view on this?
Definitely, they can buy and hold the same stock. Have a upside up to 220, 230 level from this level. So keep stop loss nearby 134 or holding with target or at least 220 level.
BSE is the other counter that Sanjay wants to know about. He's bought at the levels of 3181 and 25 shares is what he has. Wants to know if this is the right time to sell or hold. This is Sanjay is writing us from Ahmedabad. Vaishali, your view on the charts for BSE?
Well, so depending on your time horizon, so if you're a short-term trader, then yes, you may book profit. But if you're looking at a longer-term perspective, then I would say that continue holding. It's in a strong uptrend and this can go towards 4,200 levels also.
Okay, the next query is from Jeet from Kolkata. It's on Bharat Electronics. He's holding 500 shares at a price of 403. Should he add more? What are the targets for the next 2 years, Mahesh?
They can hold the same. I think 500, 520 level can be achievable in BEL at least. So from my perspective, from a longer term view, they can hold the same.
The next one is coming in on Ace Construction. Sri Kumar from Hyderabad wants to know if this is the right time to enter from a 3 months perspective. Vaishali, your view on this particular counter?
Well, I'm sorry, I don't have this chart.
Ace Construction. Mahesh, by the time Action Construction is something that you'll have to type to kind of find the charts. But Mahesh,
okay, I got it.
Okay, you got it? Okay, go ahead.
So Ace Construction, today we are seeing a good bullish candle. I would say that 900 would act as a support, 1,000 would be the near-term target resistance.
Right. The next query is on Yes Bank and it's from Thirumal from Chennai. He's holding 10,000 shares at a price of 16. Okay, he's expecting the share prices to reach 100 rupees. I believe it's not happening anytime soon. But Mahesh, what's your view on Yes Bank?
The quarter number are coming good, but yes, stock has a limited upside. So from my perspective, if you have a 2 to 3 year horizon, then you can hold the same. But you can't imagine about 100 immediately. Yes, if you are looking from a 1 to 2 quarter, if doing good, then stock can touch to 26, 28 level at least. So from my perspective, hold from a longer term prospect, but not be realistic.
Okay, all right. So that's the view coming on Yes Bank. I think we've got our next caller. Majib Khan is calling us from Pune. Majib, go ahead, ask your question.
Hi, my question is I am holding 150 shares of Vedanta at 678.
Okay.
Now with the demerger news coming in, should I continue to hold or is it a good time to book profit?
Okay, I think we've already answered the fundamental aspect of Vedanta. But Vaishali, your view on the charts, do you think booking profits right now makes sense?
Well, I would say so because the stock is really run up, or else keep trading stop loss, because right now I don't see any new round of momentum setting in. I would say partial profit, yes, book.
The next query is on Samman Capital. It's from Sunny. He's holding, his buying price for Samman Capital is 142. He wants to know whether should he continue to hold this counter or not for long term. Mahesh, any view on Samman Capital?
From longer term perspective, still fundamentals are good and stock has a valued for at least 220 levels. From my perspective, in longer term view, they can hold the same.
Okay, all right. The next question that we have is, okay, did we take Samman Capital? Okay, the next one is on Crompton Greaves Consumer Electricals, and B. Somaya from Chennai wants to know if this is the right time to buy this one from a short-term perspective. Vaishali, your view on the charts?
So short-term perspective, yes, can buy. 245 should be taken as a stop loss, and 270 to 280 would be the target.
Okay, the next query is on NSDL from Murthy from Vizag. He's holding at a price of 1100. Should he average or exit, Mahesh?
I think they should wait and watch for the same because stock has a limited upside. So from my perspective, after that, what they can review on the same.
Okay, SBI Life Insurance is the other one. Viewer has 63 shares, bought at the levels of 700 in 2019. Wants to know whether they can continue to hold this from a slightly long-term perspective. Mahesh, I'll stick with you for this one. Your view on SBI Life?
If you're holding it a longer term perspective, definitely they can hold the same. But shorter term stock is can consolidate. But in longer term, I think 2,300, 2,400 level can be achievable in SBI Life.
Bimmi from Lucknow is holding 15 shares of Hindustan Aeronautics, bought at a price of 5,000. Can she expect the share price reaching her buying price in the next 1 year, Mahesh?
Definitely, they can hold the same. We have coverage on HCL, and definitely the stock can surpass their buying price. I think stock can touch 5,600, 5,800 level in 1 year horizon. So from my perspective, hold.
Okay, we've got our next caller. I think Ajay is calling us from Mumbai. Ajay, a very good morning to you. What's your query about?
Good morning. About HCL Networks. I wanted to know the long-term perspective. It's a data center EPC player.
Okay, I see that you've bought it at good levels, Ajay. What was the thinking behind buying it?
I got it at 26 rupees.
Okay, got it. So basically, I just want to understand as to what made you buy that at 26 levels. But good that you're sitting on profits of over ₹1 lakh. And since you want a long-term perspective, I'll take this up with Mahesh. Mahesh, any view on HCL Networks?
Partial profit can be done on just any upside level, or partial can be hold. Stock is doing good on news. I think some upside can come further, but in a longer term perspective, we have to review quarter-on-quarter number and further appreciation. From the stock perspective, stock is doing good from shorter time of tenure. Some limited upside can be also seen in the stock. So from my perspective, partial profit booking is can be done in here. Partial can be hold for further 35 level.
Vaishali, quickly your technical view on Samman Capital. Any targets if you could suggest for 1 year perspective?
Well, so Samman Capital currently at 147, right? So 1 year perspective, I would say 135 as support. A move above 160 would give you a target of 190 to 200 levels.
Okay. The next one is coming in on Tata Consumer. Chandan wants to know whether he can continue to hold this from a long-term perspective. He says he's a patient investor. He's been holding this since the past 2 years. He's bought it at the levels of 1050 and it's not done much for him, right? Mahesh, what should he do?
FMCG sector is doing good, and we can see some more upside in Tata Consumer. At least 1,280, 1,300 level can come in 6 to 9 month horizon if you're holding. So from my perspective, still have some upside in the stocks.
Okay, Tata Consumer is done. The next one is from Suman from Hyderabad. He wants to know any view from long-term perspective on Tata LXZ. He has 27 shares, bought at a price of 5,951. Any view on this, Mahesh?
We do not have coverage on Tata LXZ.
Okay, then any view on Amara Raja? He also has 75 shares of Amara Raja, bought at a price of 1,150. Any view on that?
Amara Raja can be hold. Still, we can see some more upside in Amara Raja from my perspective. 950, 980 level can come in shorter time. So after that, we can review on the same.
Okay, all right. So that's the view coming in on Amara Raja. The next one that we have is on Apollo Microsystems. Javeri from Bengaluru is asking about this. His buying price is 118, quantity is 100. Should he book profits, Vaishali?
Apollo Microsystems 289. No, I don't think so. Keep a stop loss of 275. The stock is in a good uptrend. If the momentum continues, this can go to 320.
Okay, the next query is from Ashish from Delhi. He has 500 shares of Piramal Pharma, bought at a price of 190. Should he continue to hold this for short term? Any view, Vaishali?
Well, so this has shown signs of improvement. I think continue holding with stop loss of 145. It can show a good bounce, at least to start with 180.
Coal India is the other one. Pramod from Bengaluru wants to know if this is a good time to buy this counter from a slightly medium-term perspective. Vaishali, your view on the charts?
Well, Coal India is showing strength. I think this can go towards 480 levels. Buy right now, and even if there is a dip up to 430, can add more.
Okay. The next query is on TRIL, that is Transformers and Rectifiers. Harish from Bangalore is holding 300 shares at a price of 360. His holding period is 6 months. Vaishali, should he hold?
We spoke about this. 290 should be taken as a stop loss. If it crosses 330, you will get higher targets.
Okay, the next one that we have is on Union Bank. Can I purchase this counter from a short-term perspective is what Avijay is asking. Vaishali, your view on the charts for Union Bank?
So Union Bank, I think it's quite run up, but well, if you're an aggressive trader, 185 should be the stop loss. If the stock moves above 198, 200, you can look for a target of 210. That's the way to look at this.
Dhiraj is holding 230 shares of Coforge at a price of 1,270. Should he continue to hold or sell? Mahesh, any view?
From Coforge perspective, I think stock has the upside in the Coforge, so they can hold the same from a medium to longer term perspective. Stock largely seen some value in stocks.
Okay, so that's the view coming in on Coforge. The next one that we have is on Bharat Coking Coal. Sunil from Bengaluru is holding 2,500 shares at the levels of 42. Should he average at the current market price from a long-term perspective? Mahesh?
From average perspective, stock showing 32, 34 range, then they can average the same. From longer term perspective, still hold.
Mayur is holding 200 shares of Varun Beverages at a price of 500. Should he continue to hold this counter for long term, Mahesh?
Definitely, Varun Beverages is doing good, and from longer term perspective, still some steam left in the stock. So I think they can hold the same with 625 to 640 range.
Okay, so that's the view coming in on Varun Beverages. Mahesh as well as Vaishali, it's time for our rapid fire round. Try to keep your answers as short as possible. The first question that we have is on Capex Tech. Sunita from Hyderabad is bought at the levels of 5137. Good time to average, Vaishali?
Yes.
Santosh is holding 500 shares of NCC, bought at a price of 112. Is it the right time to add more, Mahesh?
They can add the same.
Bajaj Hindustan Sugar bought at the levels of 18.6. Will it be a multi-bagger in the coming years? Mahesh, any view?
I don't think the multi-bagger, but yes, some upside can come in the stocks.
Shrikant is holding few shares of BEML, Bharat Earth Movers. Vaishali, should he continue to hold this counter?
Yes.
Indian Bank, Rani from Tripur has bought 300 shares at an average price of 962. What is the target that you can expect in a month, Vaishali?
In a month, the target that one can see is 945, 950.
Govind from Jharkhand is holding 467 shares of Godrej Consumer Products, bought at a price of 1088. Should he continue to hold this, Mahesh?
Yes, definitely they can hold the same.
Nuvama Wealth Management, is this the best price to buy from long-term perspective? Mahesh, any view?
Still they can buy on the staggered way from Nuvama perspective. If any downside, then they can add further.
Satvik from Lucknow wants to know whether should he continue to hold the 380 shares of Suzlon that he has bought at a price of 41 rupees. Vaishali, any view?
Yes, continue holding.
Hindalco bought in 2024 60 shares at the levels of 541. Long-term investor, Balasubramaniam is a long-term investor. Can he continue to hold going forward? Mahesh?
Definitely, Hindalco is doing good largely. So I still some left in this stock left. So I hold from a longer term perspective.
Umesh from Bangalore is holding few shares of Reliance Industries, bought at a price of 1400. Should he continue to hold this, Mahesh?
They can hold the same.
Is this the right time and good time to buy tire stocks? Sukumar Roy from Bengaluru is asking, and if yes, which one? Mahesh, any view?
I think they should wait and watch for further for tire stocks. So after that, what JK Tire could be preferred.
Aditya from Hyderabad has bought shares of Sai Parentals at an IPO price of 362. Should he continue to hold or book profits, Mahesh?
Sorry, I couldn't get.
Sai Parentals?
I think they can hold the same.
Titan bought at the price of 3490. 15 shares is what Akash is holding from a 2-year perspective. Can he continue to hold, add more? Mahesh?
They can hold the same.
Raj is holding few shares of Seagull India, bought at a price of 380. Should he hold for the next 2 years, Mahesh?
Hold.
Can I buy Tech Mahindra at the current levels is what Amrut wants to know from a short-term perspective. Vaishali, your view on the charts for Tech Mahindra?
Avoid IT for now.
Seshadri is holding few shares of Hindustan Zinc, bought at a price of 609. Vaishali, should he book losses here or continue to hold?
Continue to hold.
Jindal Steel and Power 500 shares bought at the levels of 900. Hold, book profits from a short-term perspective. Vaishali, on the charts?
Book partial.
Biswajit from Kolkata is holding 1000 shares of CSC, bought at a price of 157. Should he book profits or continue to hold? Any targets, Vaishali?
Continue holding. Given a breakout, can look for target 195.
NMDC bought at the levels of 69 rupees. 1600 shares is what Arun from Kolkata is holding. Should I sell or hold? Mahesh, your view?
Hold.
Shrikant from Bangalore is holding few shares of South Indian Bank. Should he hold or exit, Vaishali?
Continue holding.
IRIDA for the next 6 months, what is the target price that one can expect? Gopika wants to know this one. Vaishali?
Well, it's currently, I think, 134. Can expect 160.
Srinivas from Hyderabad is holding 58 shares of JSW Energy, bought at a price of 634. Mahesh, should he continue to hold?
You can hold the same.
Trident 3000 shares bought at the levels of 27. 6 months target on this one. Ansh from Australia wants to know about this. Vaishali?
1 minute.
Trident is the counter we're talking about.
Yes, just a minute. So what's the current market price? 26.
26,
So 6
yes.
months horizon. Yes. So 6 months horizon can look at a target of 30.
Okay, alright. That brings us to the end of this rapid fire round as well as Ask Profit. Mahesh as well as Vaishali, thank you so much for helping us answer all those 86 queries as part of the management interview that we had. Thank you so much, of course, for giving us all your perspective. But we are completely out of time on this edition of Ask Profit. Do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है।
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the best shows in the KYC where I get you the hottest companies, whether you should stay with the company or avoid it, or is there any inflection point. I get you all these important details about the company. But before that, as per our format, I'm going to give you some hints. Try to guess this company. It's a Hyderabad-based tech company. Of course, there are a lot of them in the small cap space, mid cap space, but try to understand more. The second important hint is there's an EGM happening on 4th of May for a fundraise. Now, will there be an inflection point going ahead? That's the big question to be asked. The third hint I'd like to give you, the stock is up 4 times in the last 5 years. Enough of the hints. Also, recently the company acquired a company in the AI services as well. So it's expanding in AI and also looking forward for more expansion and fundraisers. And the company, of course, the sky is blue. Yes, that's also another hint. The company's name is Blue Cloud Soft Tech. Yes, this is the company which we are talking about, but the street is very much interested on the 4th of May EGM as well. But why are we calling this company right now? It's a 1500 crore market cap company in the IT, service, AI, you name it. That's what the company says. The company is planning a pref issue and a fundraise. And of course, that's happening as an EGM on 4th of May. So we'll try to understand where these proceeds will happen and what mode of fundraise would be there. They are implementing a segmented business tech model. Now, what does this mean? This was told in the 3rd quarter that there will be a pivot or a change in the strategy of the company. So we'll try to understand this. The AI businesses, what are the key details and the growth outlook looking like? How is the company, having a shift, from an IT company or a SaaS or a CPaaS company, how they are moving to an AI-led company, and the demand trends in the client confidence, any kind of impact which has happened on the budgets, seeing the geopolitical tensions or the AI wave which is happening in the Northern American markets, and any technical spends earmarked for AI. Remember, a lot of spending is happening for the company. At times, this spending might be a key concern for the investors as well. And the acquisition of Global Impix, this is an AI acquisition, by when these incremental benefits will start coming in. So the story revolves around fundraise, promoter stake dilution, and of course, what kind of growth strategy would be there. And to decode all that, we'll be joined in by Vinod Babu Bolikonda. He's the MD at Blue Cloud Soft Tech Solutions, where we'll try to understand regarding the growth prospects for the company, Blue Cloud Soft Tech. It seems like a tech company. AI enablement is something which the company says. Recently, first time they did a con call in the 3rd quarter also. So I'll try to get you more details about it. It's largely untracked counter. It was established in 1991 in Hyderabad, and during that time, the tech wave had also started in that era as compared to Bengaluru. Now, the enterprise solutions, we talk about it, they have AI, cloud, Internet of Things, and the cybersecurity solutions. So it seems like it's a product company prima facie on the first initial numbers. Now the services are there in cybersecurity and security operations as well. So largely you can see this seems like a CPaaS provider making its way into the AI segment. Now the products are in telecom, HR consultancy, healthcare, medical, education, media and surveillance as well. So that's a pretty much a wide range of services which is there. Recently they received an AI related order from Hyderabad Police and Telangana Arogyasri ecosystem. So a lot of domestic wins are also there, and globally if they are expanding, maybe acquisition might be a good plan. This might be an inflection point for the company, and that's where my eyes are set on. There's an EGM happening, fundraise would be via pref issue, and they're going to explain the acquisition and the expansion plans. Is it there for the previous acquisitions this fundraise is happening, or is it happening for something else? Also, there's a strategic pivot expected to happen in this meeting. So of course we have time to judge the company on that, and that is why the management is also coming to clear some doubts. AI and data center theme is also there. Two important points which I liked. They're intending to establish a dedicated AI and data center infra vertical. Also, let's move into the key acquisition plans which the company will be pulling out, and they will have streams across the segment. That's what the management has stated. This is coming from the publicly disclosed information. But it seems like a lot of announcements are coming for this counter, and it takes time for a stakeholder and even me to digest so much of it. 100% of Global Impacts, it's a US based energy and digital infra platform. That announcement has come. That's a key acquisition coming in. Why this acquisition is coming in? That's important because this will help the tech enabled infra company operations. It seems a little bit Greek, but let me try to make it easier for you. AI related service enterprise solutions is something which the company is focusing at. The deal is valued at 372 crore rupees. And of course, the concern would be coming in on how will you fund this. The strategic data center platform in Odisha will be a part of the deal, and this is something which augurs well for the company. But is the worst over for this counter? The first problem is the lack of analyst coverage. That is also a big concern if you are reading this about this company. But this is why we call companies in KYC to find, is there any alpha here? There is no exposure of DIs. That was a big question for me. But another concern for me was the FIs. Their exposure reduced by almost half in the last 2 years itself. That means the institutions are not convinced in the story. And of course, the retail participation has gone up. The timeline of benefits from these acquisition announcements, by when will it actually happen? That is something which the street needs more clarity. And further promoter stake dilution on expected pref issue. Already the promoters dilution of stake has been there last 2 years. Now again a further pressure coming in this space as well. So definitely there are some questions in the balance sheet and the working capital and the cash flow segment. But is this the worst over? That's the question I'm putting it forward to you. But another question, or I would say an answer for you, would be the KYC ratings. How do we judge a company? Of course, the holy grail of financial statements and you could say understanding them includes income statement, balance sheet, cash flow. Remember, these are the most important metrics. Rest can be, played around metrics as well. Some vanity metrics also comes in, but we get you the best metrics to make your investment decisions in KYC. Return ratios, let's see how that pans out. I've taken ROC here. Shareholding, how the movement has happened, and the street cred, kitna paisa bana. Is it in the last 5 years? Has this been a multi-bagger? Over the last 1 month, 6 months, have the returns come or not? Valuation, very interesting group of peers I have got for you, and I'll explain you that, and the outlook for the company, what happens next, and that is what everybody wants to know about this company. The first one I would like to talk about is the income statement, and largely the numbers have been strong. FY23, literally there was nothing in the P&L, but then you see the FY24 numbers, FY25 numbers, and you see largely a good growth is coming in. The margin front is around 8 to 9%. Let's like to show the Q3 numbers to show you how the momentum is there, and sequentially on a year-on-year basis also there is a decent growth coming in for this. Of course, for IT companies we generally say this, a little bit of moderation is there. We'll try to understand the business model of how the billing and the new client budgets come in, and largely the margins have been stable at that around 8.5 to 10% odd. The company has been able to maintain this margin. So prima facie on the income statement, it does seem that it's a positive reaction coming in when it comes to the analysis. But my concern starts coming in when I start doing the balance sheet analysis, and that is where even for an IT company or service-based company, that cash levels is something which I always look out for, and it's at a very lower level. Now, two reasons for it. Company has been spending a lot. The working capital we see has been pushed to its limits. Because of that, there is a big amount of trade receivables, and that becomes my concerns. Of course, that you can't see that in the borrowings a lot, but the trade receivables is a really big number, and that was my biggest concern for that. So right now, I would still say it's a neutral rating for balance sheet going ahead. But this concern continues, and of course, if you are having problems in trade receivables, you will have problems in the cash flows. If you will have problems in the cash flows, of course, the basic finances will be questioned for any company in KYC, and this is what has happened here. It literally looks like there hasn't been major cash flows coming in, and I checked it twice, thrice from the consolidated levels also. Understood with the management, there is a high working capital requirement in this kind of a business. But if, of course, it's a CPaaS or an AI related business, will this burn continue? And there's another fundraise happening. And of course, from internal accruals, it's not going to look like that's going to happen. So will that put more pressure on the balance sheet or on the return ratios? That is something to be concerned about. That is why it's a red flag for me. And for cash flow, I'll be giving this a strong thumbs down. But let's talk about return ratio, the other ratios also to look at. And of course, there are movements happening. It's around 7% in FY23, FY24, 19, and sudden a big jump happening. Of course, the ROC numbers, there are some elements in the balance sheet because of the ROC numbers going up. But net historically also, I checked the numbers. It's largely on the higher side when we speak about the return ratios. So I'm giving a benefit of doubt in my analysis to the company. And it's going to be a strong thumbs up when it comes to the return ratios. But another concern comes from is the shareholding portion. That's roughly around 38% in March 23. That is a little bit minor stake sell-off coming in from the promoters, and there's a pref issue also happening, so there'll be more further dilution. My concern comes here. DIs haven't come yet. There is no mutual fund or PMS taking positions here. So that's a bit of concern, but of course a company's size is also around 1500 crore market cap, so it might take some time, and that's my main reason is lack of analyst coverage. But FIs who had roughly 23% stake, they have reduced 13%. So that is of course a concern coming, and public it's around 48%. So definitely right now a little bit of concerns is there. So shareholding, I would be giving this a neutral rating. But let's talk about कितना कंपनी ने पैसा कमाया. Street cred पे आ जाते हैं. सबसे पहले let's talk about it. And the last 1 month the stock has been flat. 6 months it's been dismal performance, just 20% downtick coming in. And also year-to-date basis, of course we have seen a small cap, mid cap stocks coming back in the rally, but the stock hasn't participated. But yes, almost you could say the 5-year basis, the stock has given a return of almost 3.8 or 4 times in the last 5 years. So congratulations if you're holding the stock for a long time, you have made money. But for the short period of time, for 1 year basis, you have the stock has given 18% return to you. But of course, from the 52-week high level, the stock is down 50%. So to balance things out, I'm going to give this a neutral rating when it comes to the street cred. Let's talk about valuations and interesting companies I have picked up for our analysis, and let's get going. Blue Cloud is having a last 12-month P ratio of 18 times. Now let's compare that with the peers, who are there somewhat in this industry. We have Nucleus Software, that's around 16 times. But the major CPaaS players, there was a time when CPaaS companies used to trade at 50 times. That entire SaaS derating happened, and now look at that, just 14 times and 10 times of companies such as Tanla and Root Mobile. Pretty much interesting, and there is also a connecting fact between Tanla and Blue Cloud, but I'm going to explain you that in a certain time period. But net, I'll say there is a big sector derating which has happened, and of course the valuations have fallen. So it's a neutral rating, I would say, right now for Blue Cloud. But also let's talk about the outlook. EGM on May 4th for pref issue, and this is for acquisitions, expansion. That's what we'll try to understand from the management. Maybe the company is at its lowest point. There might be a slight up move. Also the incremental benefits of AIS Anywhere acquisition. The company has been very bullish about it. We heard about it in the Q3 numbers. So we try to get in more details. And also the implementing a segmented business technology model. What is this actually all about? Is this a new lingo, or is there something genuine pivot happening from the company side? That's what we'll try to understand. And also, apart from this, the focus on AI-driven solution and next-gen 5G connectivity. This is something which is very interesting for me when I speak about the 5G connectivity and the projected revenue for FY27. That's around 3,000 crore. That's what they had mentioned. So we just want to understand, are they on track for it or not, since the company has not come out with its Q4 results. Remember, it's a silent period, so a lot of numbers might not be shared, but I'll try to get you the best questions possible. So it's a positive view coming in for the outlook. But let's revise the numbers. Company ko kya number dein, kya ratings aaya hai. This is very much important, and let me get you here. The concern for me is the cash flow segment because of higher trade receivables. Return ratios, income statement are doing well. Then again, a little bit of concern comes when the shareholding, that itself we see the concern starts coming in because of the big dilution from the FIs and lack of DI participation. And looking at StreetCred valuation, it's a neutral rating, but net the outlook remains strong. And 4th of May is the date. That's where we'll be focusing on the key announcements. The final rating on our analysis is largely in line, I would say, but definitely be cautious on this company until we don't understand the entire picture of where this company stands. But net it's 4.5 out of 8. And now we'll be joined in by Vinod Babu Bolikonda. He's the MD of Blue Cloud Softtech Solutions. But there is a little bit of interesting fact about him. Of course, he has 24 years of leadership experience, but he held some good leadership position roles also, and this includes Tanla Solutions. That was the point I mentioned you, and the Brigade Group. And of course, he was an independent consultant. So somebody who knows the tricks and the trade of the industry is with us. And of course, the education coming in from Bits Pilani as well. So it's pretty much interesting to have a chat with Vinod Babu Bolikonda. Vinodji, good afternoon to you. It's always a pleasure to have you. I would just like to start with that important date, which is the 4th of May. There's an EGM happening. What will be this fundraise all about? Any kind of a number we can, associate that, and where will it be used?
See, by and large, the EGM, first of all, thanks a lot for having me here, Sharath, and thanks to NDTV as well. So the fundraise, which we propose for in this particular EGM, is more focused on our upcoming initiatives as a part of a strategic plan that we are doing for AI, hyperscale data centers as one part of it, and then we're also focused on the ongoing projects, in fact, which have taken a multifold of business in terms of the order book. So, which is what is being covered as a part of this acquisition and expansion plan. Acquisition we already announced about the Connectem is something which we are going to place that as a part of the EGM on May 4th, along with our results.
Right. And there was also a mention, Vinodji, regarding the implementation of segmented business technology model in the 4th quarter. Now, what does this mean? Does that mean there's a change in the business model for you, or are you adding an AI layer to your application services, which is already there for the enterprises?
Sure. If you look at it, I explained in a previous my discussion with NDTV and other channels also. So we had been an early bird in AI, especially. So we have built the AI stack. We understood right from 2022 onwards, the drift of the technology towards AI, and most of this existing platforms, we started upgrading them to the AI level, and that's a layer that we have added on top of the existing products and new products also, which have been evolved in cybersecurity as well as in AI healthcare and other enterprise smart apps, which we have developed in this area. So majorly the healthcare digitization, industrial automation side of it, and the edge AI chip, especially, the next thing that's going to happen is the edge AI, majorly. So decentralizing the AI computational power. So that is where, for our surveillance-based technology, which is what we call it as an access genning, for this, right at the camera level. So we have developed this, coming up with a semiconductor chip, which actually we developed as a part of our client contract. So initially, and subsequently, the same model we started implementing over here also.
Right. Right, Mr. Vinod. That's a pretty interesting take which you have taken for both the AI and the semiconductor portion. I just wanted to understand a little bit about the incremental benefits which was there for the most recent acquisition which have been done. Of course, there is a Odisha data center angle to it as well. Just wanted to understand what kind of benefit is there, because you have almost given a $1 billion target for the investments in AI and data center. So we won't talk about the bigger picture, but I want to know the shorter picture and by when the benefits can start coming in your financials.
So we'll be seeing that benefits start coming into our financials, especially related to our AI data center initiative, which we proposed close to about $1 billion investment over a period of next 7 to 8 years. So which will start ticking on our balance sheet right from 2026 onwards, but a smaller quantities. But as we move forward, by 2027, you'd be seeing a significant portion of the balance sheet would be covered with this AI data center business. So coming to the point of Odisha, now the data center that we are talking about, we have, as a part of our strategic planning, we have acquired this GeoImpex company, which is having a land bank over there. So which is a suitable and appropriate location in terms of the proposed subsea cable network is also might be coming there. So that's a place where strategically we have chosen, instead of, as we already committed, of investing this $1 billion. So this asset would be adding more value. And in fact, this has, cut down an initial portion of land acquisition.
Vinodji, that's a pretty interesting take. We got a clarity on your fund usage. We got a clarity on your AI initiatives, timelines. But I want to understand in the con call, there was an FY27 revenue target of 3,000 crore or something like that. The announcement was there. What is this actually? Is this the order book? Is it the revenue? And have you met the guidance?
Sure, this is majorly an order book, which we have a pipeline of orders, which we bagged through our companies and the new acquisitions which have brought in. So the significant, they cover a significant amount of revenue projection, in fact. So along with our organic business that we have, which is already being there for a long time, and on top of it, the new businesses, whatever we have added into the blue cloud, is going to bring in this number, and we are confident in terms of achieving it.
Confident achieving it in FY27. A little bit of concerns is there for a lot of investors and new folks who have tuned in to understand your company, because of course we look at the past data also, and there is a little bit of concern in the cash flow and the balance sheet segment, and that is something as a student of finance, first question is for me is to ask that, sir, the cash levels are on the lower side, the trade receivables are very high. I saw the FY25 balance sheet. Now your working capital management for a company like yours who's spending in AI a lot, and of course there is a capital raise happening and a promoter dilution is also happening. I just want to understand, how will you manage your working capital? You're doing so much, you're spending so much, already the trade receivables are very high. So what's the mitigation here? What's looking like for FY26?
Yeah, I'll cover one liner about this cash flow issue, which is being seen from a negative context. But in fact, it is not a marginal pressure or a negative reflection of operational weakness, but it is like a timing phenomenon, I would say that. So if you look at it, in FY25, the revenue approximately was around 797 crores that we have clocked, which is now 59% above to the previous year on year. And the kind of a larger contracts that we have taken, the larger enterprise and infrastructure contracts that we have taken, and receivables has increased due to the milestone based, because in AI, the gestation period is higher in terms of building the models according to the client requirements would take a longer time. And because of that, the billing structures have also taken impact where revenue recognition precedes this cash realization. And most importantly, the cash realization has lagged the revenue recognition, which is a common feature. Majorly, you'll be finding companies like Blue Cloud, where in a growth phase of infrastructure and enterprise-related programs that we are core focused on. And the whole idea of mitigating this is tightening the receivables that we are closely tracking and ensuring that we have a collection oversight is there. And then we started renegotiating on the contractual structures in terms of making them more on improved milestone-based, significant milestone-based payments, which will be realigned, where the clients have positively responded back. And strong internal, working capital monitoring model, which already we have. In fact, we made it a little on a higher side now. And evaluation of the working capital financial options, like whatever the smooth timing gaps that we could take in a bridge fund kind of a thing. And creating evaluation from time to time and maintaining that billing discipline is what core focused on, to make it more positive, and it would be reflected in the next quarter.
That's a very big point you have stated. The benefit of change in contracts will help the working capital in the next quarter, if I'm not wrong, right?
That's right. And clients have also positively responded based on the quality of the work that we have delivered and the kind of positioning that we have made for the products.
Right. So, of course, yes.
Confident about.
Right. So, of course, the management is confident about that. But apart from that, I just wanted to understand overall the demand trends and client confidence, be it AI or non-AI. Have these budgets been impacted because of the wave of AI which we have seen in the US markets, or a little bit of derating which is happening in the SaaS or the related SaaS services space?
We don't find, especially if you look at it, last 2 quarters, the kind of orders that we have received, or the enhancement of whatever the existing orders that we had, the scope of it. So it shows a trend. Yes, there is a slight pressure in that area, but essentially, if you look at it, this kind of trend is no more in a near future. We don't see any kind of a stopgap for this kind of a trend. It will keep going as we move forward from here. So we see that clients are no more now fixed, still haven't come down in terms of the budget fixing up. Yes, there is a kind of an enigma that has been set on the AI front. So essentially, more of the investments have moved on to the AI, and subsequently people started actually withdrawing from that area slightly. But again, the technology partners remains to be same, the players remains to be same, and the market requirements still haven't changed, but it is increasingly high, ergonomically year on year.
Right, and of course we have understood and you have clarified a lot of the concerns which is there regarding your stock. But I want to ask you a last question on the industry specific. How is India actually gearing up for the AI industry? Will we be something like what a US does and we become a back factory for it? Or is there something new innovation coming in, especially in the AI names like your company or your peers? How is that setting up for India?
That's an excellent question, Sharath. Not only just for the Blue Cloud, but across companies, peer companies like Blue Cloud. So India is a very good pavilion, and in fact, government initiatives are also, and the policy structures that they have brought in, changes that they have brought in, and AI initiatives that have come up right from the MIT to Information Technology Ministry. So the kind of support that they are giving seems to be, India will have a different position in AI. Down the line, and especially when you look at the geopolitical situation also at various places. So that would be an advantage, in fact. So because of the sanctions or whatever the various issues, earlier we had some kind of a pressure. So in terms of the IT business as well, but now we see that now things are changing because of the geopolitical situations. People are looking at the countries like India in terms of where they can invest or rely upon for the qualitative products and AI technology.
Mr. Vinod, it's always a pleasure to talk with you, understand about the company, and the beauty about KYC is to find out the real story about a company. It's always a pleasure to have you with us, and best of luck for the future. So this So this is the management of Blue Cloud Softtech. Of course, the street is wanting to understand what's happened on May 4th, the AGM. where they'll be talking about their pivot in a strategic manner. And of course, there are some concerns on their trade receivables, but yes, from the next quarter onwards, that will change as well. For more interesting stories like this in KYC, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
एक गुरु, लाखों तकदीरें, मिलिए लाखों छात्रों के चहेते NV सर से लाइव NDTV युवा पर। He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak.
Tepid day of trade on the Lal Street as heavyweight HDFC Bank and IT stocks drag. Sensex sheds nearly 700 points. Energy and FMCG remain resilient. IT stocks see sharp selling pressure after HCL Tech's Q4 results, and weak growth guidance spark fresh worries about demand in the tech sector. Infosys persistent tech Mahindra pull the index down. ABB India in focus after global parent says India order inflow in Q1 CY26 grew 26% YOY. ABB Global to invest approximately $75 million in Indian manufacturing and R&D. Sugar stocks rally post ethanol-related government announcement. Union Minister Nitin Gadkari said that India should aim to achieve 100% ethanol blending in order to reduce import fuel dependence. Sources tell NDTV Profit that the government is considering a revision in voting right cap in banking, a higher revision from the current 26% may be on the anvil. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take a look at the market. Yes, Nifty 50 has recovered a slight bit from the low point of the trading session, but it's a weakish day of trade. From losing about 185 odd points, now it is less than 150 points. So it's a gain of about 30 points in the last few minutes of trade. A large part of this particular let-up that is being seen and a little bit of recovery could be coming in from some of the tech sectors, tech companies which had been falling in trade. But remember, a largest part in terms of the contribution for Nifty 50, 150 odd points that is lost, that is totally on account of two sectors, especially IT sector, and that is led by the disappointing results which did not meet the expectations of HCL Tech company, and that has really been a drag on the IT sector, the worst performer today. And apart from that, the heavyweights in the banking space like HDFC, ICICI Bank really taking the lead, and SBI, Kotak Mahindra Bank, all weighing heavy on Nifty 50. So these two sectors really comprise of the entire 150 points that is lost on Nifty 50. But at the current moment, in the last few minutes of trade, there has been a slight bit of recovery, say about of 30 odd points. So keep that on the radar. When we talk about the sectors, well, it's the energy, defense sector, as well as some of the consumption play. Those are the sectors which are really taking a lead, but there are minor gains. On the downside, IT is a huge draw down on the overall market, over 4% down on the IT sector. Mid-cap universe, though, is outperforming the key indices today. So the mid-cap index is still positive and gaining 0.25% at the current moment. So keep an eye out on the market, and it is a weakness that is really creeping in once again. Now let's also take it through the market expert who's joining us. Dilip Bhatt is joining in with his expert take on the market. All right, we'll touch base with Dilip Bhatt in a bit. But before that, let's also take a look at the energy sector that is really gaining with 1.3%. So that's the sector to watch out for. Dilip Bhatt, the founder of Pedigree Advisory, is here. Dilip, always a pleasure to get chatting with you. What do you make of the volatility in the market where there is one good day and the other day of weakness, and especially the IT sector is a big drag today?
Good afternoon. I think the volatility is here to stay without any doubt, and we are all feeling it. We are seeing this volatility as the markets have seen a fair amount of bounce back. And I think this bounce back is what this bounce back is at play at the moment in India and globally. Globally, though most of the indices have crossed their previous top, in India, it still remains to be seen whether they will cross the previous top. I'm sure they will sooner than later. But at the moment, I think the way to look as what I would say is, first you play for a bounce back, and then from the bounce back onwards, the fundamentals, both the company's fundamentals as well as the macro fundamentals will come into play. And that's where that is what will decide the trajectory and the direction of the markets.
Right. And Dilip, when we talk about the IT sector, and you've seen a fair bit of results coming in from the top 5, majority have really posted the results and the commentary as well as the guidance. What do you make of the IT sector, and how will you really play that?
Sure. I think the IT sector had definitely fallen quite a bit in anticipation of all the kinds of worries, apprehensions, all impacting their volume growth. And to a great extent, even the visibility for them. I think the depreciation of rupee has come in very handy for them to support that thing. So what was more important is not the quarterly results, but the management commentary, as you very rightly said. And management commentary is nothing which inspires all that great confidence. I think we are still talking about, at best, something which is linear, which is going to happen. And even if that happens in a growth, that will be good. But I think the growth apprehensions will still remain. In a way, as what I would say, that the IT sector, the sheen was wearing off gradually. The labor arbitrage that India had, the USP, I think that played out very well over last maybe 15, 20 years. And possibly if that is what is going to be the USP, market is not ready to really look at it in a very serious way. But the major tailwind in favor of IT sector is the conversion of free cash from EBITDA is very high. The core ROE, ROCs are still very good. So in a way, I think, as what I was just mentioning somewhere else, that the IT company may soon slip into something like what FMCG sector was, where the volume growths continued to be very tepid, very muted. But FMCG sector was very expensive. Fortunately, the tech sector is not very expensive. And with the kind of free cash flows they are giving and the dividend, that dividend and the buyback gives you a very good dividend yield. So somewhere at a particular point of time, the IT sector can become a good buy. And tactically also at some point of time, it may become a good buy. But on a longer term basis, it will play a role of a defense rather than giving you any proactive returns.
Right. Also, Dilip, when we talk about the energy sector, now energy is bifurcated into the traditional and the new age energy spaces. And of course, the benefit of the war situation and the fuel shortage has really come on the green sectors per se, which has been benefited by even the EV space and the battery space. How do you play this whole space? And in terms of valuations, in this kind of a market, do you see the investment, value picks in this particular sector and the potential for growth for a medium-term perspective?
From a tactical and strategic point of view, I think what we certainly, the renewable energy, as what you said, the green energy comes into play in a very good way, whether it is solar, whether it is wind, and everything related to that around, whether it is ethanol or something related to with the batteries or the storage of the power. I think all those things come into play in a very big way because India is very well placed as far as the solar part is concerned, and even to great extent, even the wind part. So I would say that one can focus on this sector and some of the leading names. I think, for example, you have Wari, which looks pretty good. Premier Energies looks pretty good. I think slightly away from that, insolation energy, that looks pretty good and interesting. So I would say that this sector, and even Suzlon, I would say. So what I will think about it is that this sector is something which one can play as a short term, or short to medium term also, and maybe even in the long term, because all of us have felt the pinch because of the war. And I think this sector will, investors will root for this particular sector and companies within this sector. So that's one thing which I think should do well. And along with that, I would even think something like EVs will play out very well in the times to come, maybe in the next 1.5 to 2 years. So I think these two sectors, as far as the energy is concerned, energy sector is concerned, looks pretty good. At the same time, I would say something like even NTPC would also look very good because they're combined. They're having a good blend of the conventional and the non-conventional also.
So right now, Dilip, how much cash are you ascertaining in the market? Or the momentum also and the insight also from most of the market men is that the next quarter is going to be a significant drawdown because of the war situation continuing and the crude oil prices still above 80-90 levels. So how will you really play and how much cash will you ascertain? What will be your investment strategy?
So I think slightly on a top-down basis, if one were to make a very broad estimate of the Nifty EPS growth for FY27, I think it should be anywhere in the range of 11 to 13% is what our broad estimate is. We are refining that, and that is still under process. But that is also subject, that is also vulnerable to a downward revision as the quarters progress. And that's what we have seen happening in the last couple of years too, that at the beginning of the year, whatever Nifty that was estimated, that was revised downwards couple of times. So I think this time it will be no different. But more important, I think this run up to this June, July is something where I think one will get some very good opportunities to buy some of the stocks slightly on a longer term basis. And one may not necessarily expect those runaway rise and huge multi-baggers, but I think that's something which can give you a good, decent return over 15 to 18 months. So this is what we will look for in a run-up to June, July months. And most important, as what you said, that first quarter, of course, is something which nobody is expecting anything great. But as what I said, more important, is it going to also impact the couple of quarters following the June quarter is something that needs to be understood.
Right, Dilip, in fact, that's the biggest aspect to watch out for, and also not baked into the market valuations and momentum as well. But next buying opportunity can present itself after the next quarterly results. And after that, the assessment of one, a monsoon, and the second going to be the future earnings based on the war situation. Thank you so much for sharing your insights, Dilip. It's always a pleasure speaking to you.
Likewise, always a pleasure. Thank you so much.
Thank you. All right, let's shift focus on one stock which has been a cause of worry now today, post their earnings as well as the guidance, the weakish guidance, and the market is not seeing any let up when it comes to HCL Tech. Very disappointed, and that is really punished by over 10% pressure really on the downward side for this IT bellwether. Now, HCL Tech slips to, remember, 1 month low after the weak Q4 results. And I caught up with the management, C. Vijay Kumar, who's the CEO and MD of HCL Tech, and asked him about the factors that will really aid the company's growth going forward and much more. Listen in. My first question to you, of course, the guidance that you have now given is a wide range, 1 to 4%. Can you give us a sense on what are the variables as well as the factors which will either tick up the growth at 4% or will come down to 1%?
Yeah. Good morning. Yes, our guidance range is 3%. Last year also it was 3%. We started with the 2 to 5% range for the full year FY26, and we delivered 3.9%. This year again we're in a 3% range. At the lower end of the range, we think the softness in the discretionary spending will continue. And we have two client-specific situations which will also take away 0.5%. And at the higher end, we think the situation will slightly improve, and we also expect a couple of large deals to be concluded in the first half of the year, which will translate to revenues in the second half. So that's really the overall logic.
That's right. And when we talk about the discretionary spend, Mr. Vijay Kumar, how is that really picture developing? What are the factors which are really impacting? And the global turmoil and uncertainty that we are really seeing on the economic front as well. How much of that is impacting the discretionary demand for your space?
Actually, it's very difficult to really visualize the overall macro and possible impact. And if I were to just take an overall view, I think Europe is looking a little softer. North America continues to look good across various clients, except a couple of client-specific things that I talked about in two telco clients. That's really what it is. And I don't want to take a view on how the overall macro and how it will impact. We think overall the discretionary spending has been soft, and it turned a little more softer in March. That's why we came below our own expectations for the quarter. And that's what we baked in, that environment will be soft. But the bigger theme is how do you really use AI to build new services which will offset some of the deflation that has been caused due to AI in the traditional services. And if you look at our numbers and guidance on the services is 1.5 to 4.5, which is 3% is the midpoint. And the last year, FY26, we delivered 3.8% in organic growth in services. So it's actually an 80 basis points lower than last year at the midpoint of our guidance. So we have been able to offset a lot of AI-led deflation. Almost 2/3 of AI-led deflation we've been able to offset. Because if you recall, we talked about 2 to 3% deflation in the traditional services. So we've been able to offset that and still deliver 3% services growth. Still guiding 3% services growth in FY27.
All right. So that was the management of HCL Tech. Discussing the guidance as well as the perspective. Remember that in this particular guidance, they have not incorporated the 2 acquisitions that they made last year, which are pending approval, and that will add 1.5% of growth whenever the approvals come in, and that's outside the guidance that is already given by the company. That's one point to really note. Could be a bright spot for the next financial year. All right, brokerages stay cautious, but on HCL Tech, after a weak performance and soft outlook, Citi maintains a neutral rating, cutting its target to 1,385 rupees per share and citing weak Q4 numbers as well as subdued FY27 revenue guidance that could really weigh on the stock near term. Investec also echoes the caution, flagging client-specific issues and also lingering revenue headwinds into the first quarter of FY27. While near-term sentiment remains pressured, both brokerages still see HCL Tech relatively better placed versus the peers over the medium term. So that's the big word really coming in. That stock is seeing no let-up in sight, down over 10%. All right, another important company from the IT bellwether side is Infosys, will be the last one to really report its numbers on April 23rd. Here's a source-based information which we have independently confirmed. Salil Parekh is likely to get an extension of 2 years post his term ends in the next year, that is March of 2027. Now remember that Salil Parekh's second term as CEO is unlikely, which is going on, is unlikely to be extended over the third term, full term of 5 years, and only 2 years extension could be given. And Infosys board is also likely to discuss the CEO's extension along with the results on April 23rd. Now here, this particular discussion is coming in for a few specific reasons, which our sources have confirmed to us and shared the insight on. First, Infosys is looking to send a signal of stability as well as continuity by giving Salil another 2 years extension. Also, Infosys does not want to cause a leadership disruption, and an abrupt one at that, because it has been stable 2 terms with a good amount of growth for Infosys under Salil Parekh's leadership. So in a challenging time for the IT sector, they do not want to really send out a cautionary leadership disruption, and therefore want a smooth planning of succession with part extension to Salil Parekh so that the handover is going to be smooth and the business is not impacted by the change at the top brass. We did reach out to Infosys on this. There were no comments on the discussion on the CEO's tenure. All right, looking at the IT sector, and remember, it's the biggest dragger in the market today. And another set of results coming in, Persistent Systems. That stock is also seeing a huge amount of pressure in trade today. In fact, the entire IT pack is the biggest dragger, and that particular index is down over 4.5%. So Persistent Systems, that reported a largely in line set of numbers, was posted the 24th straight quarter of growth. In fact, Puneet is standing by with more details on the brokerage verdict on how the future is looking for Persistent. Tell us, Puneet.
Back of results. Now we've seen a disappointing set of numbers from HCL Tech, and that's slightly having an effect on Persistent as well, because while the numbers weren't half bad, It's the sentiment that is getting hampered today across the IT pack. So for Persistent specifically, results were below estimates for some brokerages like Nuvama, but over a 3% constant currency growth is quite decent in the current environment at this point of time. The only fair bit is valuations, and that's where brokerages like Citi continue to maintain their bearish view. They've said specifically that they maintain a sell rating with a target price of 4,230. They say while Q4 was largely in line, there's a significant valuation expensive largely for Persistent system at this point of time. They've highlighted that macro uncertainty is there according to the management, but they remain confident at this point of time to drive market share gains within the business accounts. They've also highlighted that that Citi continues to be cautious at this point of time on the sector given the high competitive intensity as well as the AI impact at this point of time. Another one like Nuvama actually has mentioned a similar point of view where they feel that current growth of almost 3.4% constant currency was slightly below their own estimate of 4% constant currency growth on a quarter-on-quarter basis for revenue. But again, much higher than what the peers are reporting at this point of time. Nuvama retained a buy target price of 6,100 versus 6,000 earlier. Has also highlighted that there continues to be a persistent pressure on the industry as of now, but growth and commentary was slightly a tad soft for Persistent. So something to watch out for in FY27 because they maintained their guidance, but for now, largely seeing a rub-off effect from the other players like HCL Tech.
All right. Thank you so much, Puneet, for joining in with all those details. Now, stellar quarter by Nestle has really seen bullish stance from several of the brokerages, and that stock is really smiling pretty with over 2% gain in trade at the moment. And many of the brokerages are hiking the targets amidst the sequential growth. Mahima is here with all the details. Mahima, tell us.
Right, Nisha. So, as you rightly mentioned, a lot of brokerages have kind of gone ahead and, hiked the target price for Nestle. And this is on the back of the way earnings came out yesterday, because a 500 crore beat as per what analysts were versus what the analysts were expecting. And, this was expected to happen, right? The target price hike coming in. Morgan Stanley has maintained equal weight, hiked the target price to 1461. They're saying strong beat coming in on top line and margins. Goldman Sachs has also hiked the target price to 1425, maintained the neutral stance. What they're saying is the GST cut benefits has played across categories. Rate cuts, quick commerce expansion are the key driver going forward in H1 FY27. Gross margins are likely to remain stable on account of stability in overall raw material pricing. Investec has upgraded it to hold, given a target price of 1426, says sweet momentum continues, robust operating margins on account of cost efficiencies, and await more compelling valuations and continued evidence of growth momentum before considering a further upside. Jefferies has also maintained hold with a hike the target price of 1325. They're saying that ad spends rose by 50%, signaling a growth mindset. Despite this, EBITDA margins expanded to a multi-quarter high even while gross margins contracted, and they retained hold rating just on the back of stiff valuations on this particular counter. Macquarie has also maintained neutral, hiked the target price to 1400. They say this overall, this quarter has been healthy in terms of sales growth, and this can be sustained going forward. Growth was led by GST rate cut linked grammage increases as well as rural distribution expansion, and they maintain neutral considering the limited upside at the current 63 times FY27 forward EPS. Lastly, Citi has also maintained by hiked the target price to 1675. This is the highest target price amongst all brokerages. What they're saying is that all-round beat to support premium valuations is what we've seen this quarter. Believe growth momentum is sustainable over near to medium term, supported by brand strengthening and execution. And despite 20% stock rally in the past month, expect earning trajectory to support premium valuations. I think the key takeaway is that good set of numbers, sustainable going forward as well, but valuations looking very high.
All right. Thank you so much, Mahima, for breaking that down for us. Another important stock on our radar, transformers and rectifiers, that trades under pressure after missed FY26 guidance in the Q4 results. Varsha is here with a whole lowdown on what's really not working for this particular counter. Varsha, tell us.
Well, let us start with what did not work when it comes to this quarter, that is Q4 FY26. The higher revenue did not translate into profitability growth, number one. Then you saw the margin compression. Q4 FY26 margins were 15% versus 19% last year. Higher ESOP expenses and contraction in gross margin impacted EBITDA margins, and Q4 order inflows was down 47% year on year. While what did not work for FY26 over FY25 is they missed guidance across key metrics. Execution was expected at around 2,600 crore, but they came out with the sales of around 2,500 crore. So overall, lastly also, if you see the closing order book was at 5,000 crore versus expectation of 8,000 crore, and CFO turned negative at 110 crore due to working capital stress. So overall, did not meet the guidance, and Q4 number was a miss.
All right. Thank you so much, Varsha, for taking us through that. So lots of earnings, lots to digest as well. But it's an end on markets at 12. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कुछ खास होने वाला है।
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, good afternoon. You know, it's an interesting day of trade with the kind of sell-off that's coming in when it comes to IT as a sector. You know, there are individual pockets which are seeing some smart gains, but it's a very interesting setup because your volatility is also pretty high right now.
Right. Good afternoon, Hiral, for that. And yes, there was